Well, hello out there, everyone. Greetings. Let's see. All right. So we are getting started here very quickly. All right. So thanks for coming to our seminar today. If somebody wouldn't mind, real quick, in the upper right hand side of your screen, upper right hand corner under the questions pane, if you would just kind of type something in there and let me know that you can see the screen and hear me. Let us know if things are sounding good. All right. Great. Hello, everyone. Greetings. Yes, that's correct. All right. People are here. I'm here with 7-star Mike, who is also here. We'll be here very quickly.
What's up, everyone?
There he is. So how you doing, Mike?
I have zero complaints over here.
Is the weather nice today?
Oh man, I just spent all morning on the beach.
Oh
Did a
my
little video on Twitter to announce the seminar. You can go check out the background there. It's beautiful.
Yeah, I saw that. That makes me. I mean, I love it here over on the other side of the country, but yeah, you win when it comes to the weather. Well, I hope you guys are having a great time out there too. We're going to get on the road. This is definitely what went wrong. The idea here is this is a losing trade discussion where we're going to talk about things that sometimes don't get talked about as much as they should, in my opinion, and that is when trades go wrong. I mean, we lose trades, and Mike loses trades. Everyone loses trades, and it seems like it's a valuable thing to talk about. So we will get started with that very quickly. So on the screen, you see some of our basic contact info. I'm on Twitter at GreatRVR, and Mike is at 7-star Mike and a bunch of other places. Do you prefer Twitter as your main kind of contact channel, or do you have a preference, Mike?
Twitter's the most active and the easiest, just because most people are on there and you can put charts videos really quickly. It's probably the go-to as far as me putting out information.
Yeah, I got you. Yeah, I agree. Twitter is about the only thing that I do, but I do. Mike is also all over the place with many other things. And so a quick history. I do see already there's questions coming in, and that's great. And but real quickly, the idea behind this seminar is that I contribute to Trade Talk Media, which of course is Mike's amazing website that's devoted to making trading simpler. I mean, I don't want to speak for you, Mike, but that's what I get out of it. It's simplifying traders. I was simplifying traders. Try it again. It's kind of a crazy day today. Simplifying trading for traders. So I contribute this column about scalping to it, and I recently have done a few columns where I just kind of talked about ways I've screwed up, and here's how I screwed up, and just I wrote about it, and there was a big response to that. A lot of members and readers said, "Hey, that's great to hear how people, that's great to hear about losing trades," and there just seemed to be a lot of response. So we got this idea of, well, maybe we can do this thing on the weekends where we talk about losing trades. And one of the things I talk about in the intro to the market class and in my day job in the university is this idea of how we learn, like the science of how the human brain learns, called human learning theory, a very powerful way that I've been applying to my trading journey. It's called iterative learning. So if you guys think about this in real quickly in reference to your trading. So iterations are just repetitious cycles of things. So here's how you learn iteratively. You do an action, and then you fail at the action. You reflect honestly on that failure, and then you refine the process and you redeploy the action. So the idea, that's an iteration. That's what you do. And if you apply that to trading, it makes a lot of sense. There is no way you're going to trade without making some mistakes. So if you honestly reflect on those things, that failure can be a really big teacher. And I'm super pumped that Mike is here and we talk about this stuff a lot. But that's kind of where this idea of the seminar came from. This idea, how can we fully address failing and learn from it? What can we learn from it? So today we are going to discuss some common reasons traders take losses. We're going to analyze some submitted trades from members. That's exciting. Definitely got some trades submitted, and a couple came in last minute that can't be included, but we'll get to those. Then we'll open it up for you guys out here to raise your hand. I see there's close to 100 people here, which is great, but there's a handout you can see in the upper right hand of your screen. You'll see the handout section. There's 2 of them. And if everything went right, if I didn't make some kind of mistake, you should see these 2 handouts. And there's one where you can, it tells you when we open this up to you guys, you raise your hand, and then I will look and I'll unmute you, and you can tell us about a losing trade, talk to us about whatever you want to talk about. And we're going to try that out. There is a lot of people here. We're at about 100 people right now, so we won't be able to do that for everyone, but that's going to be a key part of it, and we'll just see how that goes. But the general theme is just open and honest discussion about learning from losing trades. We see gains everywhere online. We hear about that nonstop, but today we're going to explore about learning from losses. So we're going to get into it. That's enough of me blabbing. We want to hear from the man, and we're going to go through these things. But the last thing I want to mention to you guys, the other handout, submit to me some losing trades for next week's seminar. The instructions on how to do that, it's very simple. Just check it out with that posted handout and let me know if you'd like to have a trade included in a future seminar, and send them to me. So Mike, what do you think so far? Tell us about your approach to losing trades. Generally.
Well, I've been trading for 6 years now, so I am at this point very disciplined in my approach to trading. When I first started, I had a common mistake, just like every new trader, where every losing trade you're in is going to turn around. You just have to sit in it long enough.
That's right.
And then if it doesn't work out, you just have to double down. And when that doesn't work out, you just have to triple and quadruple down.
Oh, man.
And I've lost a lot of money doing that. So it took me about probably 6 months to a year of analyzing all the things I was doing that was costing me money. And then I put strict rules in place. And then every now and then I would break those rules and find out, yep, that's why it was a rule in the first place. So it got to the point where I just have my rules and I'm very strict to sticking with them. Losing trades for me, if a trade is busted, the trade is busted, get out of the trade. I just don't care about hoping it comes back. I don't care about taking a loss on a trade. Losing trades happen. If you're a trader and you want to make every trade perfect, get out of trading because you're going to drive yourself nuts. So my approach to losing trades is it's just a cost of doing business.
Right, right. So you mentioned that, okay, first off, can you guys hear? I'm getting a comment, at least one comment says they're having trouble. They don't hear any voice. Do you guys hear us still? Can you hear me and Mike? Go ahead and leave me some comments in that. Okay, so it looks like, Akeem, it looks like most people, yeah, people can hear both of us. So that must be some kind of issue on your end. So I apologize for that. So sorry about that, Mike. I just wanted to, perfect voice we have. Listen to that. Great. Okay, all right, so here's 4 things, Mike. I put this out, and you're talking about it took you 6 months to a year to just kill a losing trade. You're right about holding on and doubling down and tripling down. There's no doubt about that. But people, I put this out just a few days ago. We're going to be doing this seminar, and I got 4 main issues that people have definitely sent in. They wanted to hear us and hear you talk about. So you talk about doubling down, and are people more apt to do that, in your opinion, with losing trades when they are over positioned?
I don't know if it's over positioned. It's just so much that they refuse to admit they were wrong.
So just stubbornness, right?
Well, new traders, they want to make money, right? So if they're losing money, they're going to find a way that they can get it back. And the best way to get it back is basically admit you were wrong, get out of the trade and find a new trade that's going to basically be a better setup. But being stubborn and doubling down is basically saying, well, it's not working out, but I know I'm right. And if the chart says you're not right, you're not right. So doubling down just means you wasted twice as much money as your initial risk tolerance.
Yeah.
So I don't know if it's a positioning size thing when it comes to doubling down, and more just a stubbornness to basically not admit that you were wrong.
Yeah, I see. Yeah, I had that same thing. That's got to be just a common thing with most traders. I definitely hated in the beginning, probably the first 4 or 5 months, the same thing. I hated taking the loss. Just I thought I can just hang on and maybe it'll come back my way. Maybe one more candle, right? That was kind of a thing. But over positioning was like right at the top. A lot of people out there are having issues with just going too big, and it gets them in trouble. And what's your advice just about positioning for traders?
First and foremost, you can't think you're going to get rich overnight. If you know what you're doing as a trader, the money will come. This is a very extremely lucrative industry to be involved in. The money will come. If your goal is to get rich tomorrow, it's not going to come, and you're going to have a lot of heartache trying to get back what you lost. And then even worse is maybe your first few trades, you do make a ton of money. If you have no risk management or trade management ideas in place, as much money as you just made, you're going to lose it all and then more. So when it comes to positioning, you've got to take sizes relative to your account balance. If you have $1,000 accounts, you do not put a $500 contract in there. And people can yell and scream all day long and say, this is the best trade. This is going to work. I know for a fact this is an amazing setup. This is the best entry you can find. You don't put a $500 contract in a $1,000 account.
Yeah, that's right. That's right. Right. I remember the first time I was over positioned, and I felt what that felt like to try to manage a losing trade. Try to manage a losing trade because I was still in that phase of I just didn't want to kill it, and it was just so much, and it wasn't a huge loss, all things considered, but yeah, it wasn't half of my account, but it was probably a quarter, probably 25% of my first account I started with. Like I went in one position with 25% of the account, and looking back, I can't believe that. At this point, I would never do that. And but I've been there, and do you think it's pretty common people over position to that? 25, 50% of an account. Do you think that's kind of a common mistake that's made?
100%. I get so many messages from people that say, hey, dude, I'm struggling. I need get some tips. Help me out. And my first thought is, okay, let's see what kind of trades you're taking. And they go, oh man, I've got time to wait. I can't do any trades right now. I've got $10,000, but 8,500 is tied up in trades. And I'm going, oh wow. First of all, that's a lot. But okay, let's break down the trades. And they go, no, there's nothing to break down. It's 2 trades. So I mean, all day long, I get messages from people that are struggling, and their biggest thing is they just have so much tied up in a trade. And a common thing that I hear is I'm stuck in the trade. Well, 40% of my account is in this trade. I'm stuck in it. You're not stuck in it. Close the trade, get out of a crappy position, and move on to a better setup. So over positioning, I don't know where I would rank that as far as the top things traders do wrong, but as a new trader, that's definitely up at the top. People, you can go on Twitter and see someone post a $600,000 gain in one day, and everyone goes, "Oh man, I want to do that." And they have a $25,000 account, so they think to do that they've got to put 20 out of 25,000 in the next position, and it doesn't work like that.
Yeah.
Even if they make money on that one trade, eventually they're going to keep doing that, and they're going to get wiped out. So positioning, it's vital. You'll hear Mario talk if you listen to her repeatedly. She says your number one job as a trader is to mitigate risk. So if you take a $15,000 account and you've got 3 $5,000 positions in it, I mean, you can't mitigate risk. One bad day and all 3 of those positions drop on you, you just screwed up your entire account.
Yeah, sure. Yeah, people are asking, or they're mentioning, like Friday lottos and kind of, practices about that. And there has been a lot of issues I've seen here and there, just generally with like lotto type things, and just that whole mindset of just over positioning for those. And I've heard someone just kind of bring in the lotto situation, into over positioning conversations. And what's your advice just for lotto type trades if people are choosing to do those? That's a tricky topic. What do you think about the lotto thing?
So someone asked me the other day on Twitter, they're like, hey, I'm looking to trade, same day expiration. Do you do lottos? My answer was no. And they say, I thought you were, because I constantly talk about how I love trading Friday expirations. They say, wait a minute, you don't do that anymore? I said, no, I do that all the time. They're just not lottos. So for me, same day expiration just means I've got to be quicker reacting to a ticker that, it expires in 3 hours or 20 minutes or whatever. It's not a lotto to me because I'm taking the setup based on a chart pattern that if it was any other day of the week, I would have taken that trade anyway. To me, a lotto is saying coin flip, 50-50, this could work. I'm just going to throw money at it and hope it makes, profit.
Yeah.
So I trade same day expirations all the time, but they're not lottos because there's a reason I'm entering the position. So I don't call them lottos. But so people that want quote unquote lottos, it's people that want to throw $200 at something and turn it into 1,200 in 6 minutes. And sometimes that happens, of course, but a lot of times it won't. So if you use the term lotto specifically, that tells me you're trying to take a big risk for a big reward. If you're taking a big risk for a big reward, you've got to size those such that if that goes to zero, it just doesn't hurt you.
Yeah, that's right.
So the idea on a lotto is you're going to make a little bit of money, but you're not going to get rich. But if it goes against you, it's also not going to blow up your account. So if you have $1,000 account and you want to have some fun on a Lotto Friday, put a $5 or $10 contract in there. Literally $5 or $10, not a $5 contract, which means $50. Put a $5, 5-cent contract in there.
Right.
If you have a $20,000 account and you want to put a $200 or $300 contract in there, go for it. Because if you have $20,000 and you lose, $300, no big deal. You come back Monday and you're trading. But if you have a $20,000 account and you're putting a $5,000 trade on that expires in 40 minutes, and you're just hoping that it's going to work out, in the long run, you're going to blow up your account and you won't be trading in 6 months.
Yeah, that really can't be expressed enough because like you're saying, you hear from people all the time who are just over positioning in all kinds of trades. They're just I hear from a lot of cautious traders. I think a lot of people know I'm kind of publicly a real cautious rabbit, and it's I don't know, I'm just real cautious with most of the trades I take. And so I mean, I hear from tons of people who are similar to that, but you're saying that you definitely hear a lot of people just taking these big positions. And your point about the lotto bears repeating many times. You're saying if it goes to zero, it should not have any pain. It shouldn't affect you.
That's what you don't go to the corner store and buy a lotto ticket and put enough money in it that you have to make money on that lotto ticket, right? Because the odds are against it.
That's right.
So if you use the term lotto for trading, and I know what people are talking about. I know it's not, you can take quote unquote a lotto and it's not, a coin flip because you have a good level of support that it's bouncing off of. So they call it lotto because it might expire in 4 hours. But as long as there's a good level of support, I don't consider that a lotto. I consider that you're buying a call contract bouncing off support. So there's more to it than just, I'm going to buy here and hope it makes money.
Yeah.
But when people use that term lotto, to me, it means they just want to take, a big risk to make that big reward. So if that's the case, since it's a big risk, you've got to position size such that if it doesn't work out, you can still trade. So if you have a $1,000 account and you put a $300 contract that could potentially go to zero in the next 40 minutes, that's just poor risk management.
Yeah.
So you've got to position size such that if it goes to zero, we don't want it to, but there's a good chance it can. If it goes to zero, you just don't care. You don't go into the weekend going, oh man, that last trade of the week sucked. Oh man, Monday's going to suck. How do I get this back? Because you just ruined your whole weekend.
Yeah. And you can't do anything about it. And Monday, you might be more likely to revenge trade, et cetera, entirely. Yeah, several people have said they've all just stopped but trading on Fridays at this point. A lot of people just seem to have that idea. Someone asked, do you think 5% of a portfolio is considered a safe and responsible play?
Hell no, way too much.
Yeah, I was about to say that.
Your typical advice for any individual trade is going to be 1 to 2%.
Yeah,
Your typical advice for an entire portfolio at any given point, at least for us options traders, the way we trade, is no more than 40%, and that would be a lot. It is extremely rare that I have 40% of my accounts exposed. So it's more along the lines of anywhere from 10 to 20. Now with the market conditions the way it is, I'm mostly cash every night.
yeah,
So 5% of your portfolio in a single trade typically would be considered way too much. Now there's kind of an asterisk to that. If I have $1,000 account, and I've done this before, so I started a small account on Twitter to show people what you can do with a small account using Flow.
yeah,
And the small account for me, I put it at $10,000. So for some people, maybe that's not considered a small account. For others, it would. So I used $10,000 to start the small account challenge. I actually had an account or a contract in there that was 2,500, which would be 25% of the entire account.
yeah,
Would
yeah.
I recommend that to other people? Absolutely not, under any consideration. When I did that, I knew the risk I was taking, and it's not me being a new trader putting 25% of my account into a trade. It's me with 6 years of experience knowing what I'm doing. It was a trade I was very comfortable taking, but in the back of my mind, I had the risk tolerance. If this goes against me, I mean, it's potentially 10, 15, 20% of the account is gone.
Mhm.
Now, again, I had a specific trade idea in mind for that. It was supposed to be a very short-term trade. It ended up being a short-term trade. I made money on it, but that is extremely rare. So if you have $1,000 account and you put a $300 contract in it, you're breaking the 1 to 2% rule. But with $1,000 account, you have to.
Yeah, what is like the smallest amount of an account that you could really trade options and learn what you need to learn and start growing some money, in your opinion? Because those small accounts, I know a lot of people have contacted me and they've they have $500-600 in their account and they've had questions, what should I do with $500, because obviously 1% of that is not going to buy
Yeah,
anything.
$500 account, you can't stick to the 1% rule. It's just not going to work.
Right.
Now, there was a point where I was doing every month $500, and at the end of the month, I would take it back to 500 and start again. At the end of that month, take it back to 500 and start again. And I had some success with it. At this point, if I tried to do a $500 account, and I'm not, super rich up on a hill looking down on all peasants or anything, but a $500 account for me would be, I can't do it anymore because it just moves too slow.
Yeah.
So I can do a $1,000 account and find a trade here and there to put in it that I'm comfortable putting in it. But you have to understand it's going to move slowly. So you can do it with 500, but it's tough because one trade, $50 goes wrong, you're down to 450. If another one goes wrong, you're down to 4, and now you're mentally messed up. So 500 is tough. It can be done. 1,000, tough, but can be done for sure. 2,500, you're fine. So if you can find 2,500 to start trading with, and you really have a disciplined set of rules to follow, you'll be fine with 2,500. 1,000, yes, it can be done. In fact, one of our members started with $34, and that's all she had. And she started with $34 and took these tiny trades and grew and grew and grew and got it to 2,500. So you can start with $100, but you have to understand you've got to be very disciplined on what trade you take in those smaller accounts. You can't just throw caution to the wind. You've got to be very disciplined. Jenny is amazing finding very low cost contracts that do 40%, 80%, 120%. She's amazing at that. So if you have a $500 account and you take the types of trades that she puts out, you're going to do great. But she's got this eye and just a feel and a sentiment for what contracts to be in that are going to do that. Most people don't. So when they have $500, they say, oh, I want to get to 1,000. So they're going to take their $500 and put it all into one trade. Which again, if that's what you want to do, that's fine. But you have to understand the risk associated with that, where if you go wrong, you just blew up your account, you no longer have money. And that's the disconnect that people don't have. Or the disconnect that they do have is that I'm going to take the small account and I'm going to grow it, but I'm going to do it in an aggressive manner. But they don't think about the one trade that goes against them just blew up their whole account.
So growing a small account is going to take time. I'm curious, do you know how long it took that member? I think you said it was a she, how long it took her to go from $35 to 2,500? Did that take a year? Did that take
No, it was actually just a few months.
a
She's
few
the
months?
rock star though. She's one of those naturals that just figured it out and knows what to do.
A few months. Well, okay,
But
gotcha.
she's also said it took a lot of discipline because she was taking trades that were going against her, and then she had to go back to, well, wait a minute, what did I do when I started to go from 35 to 500 to 1,000? And then when you start getting from 2,000, 25, 3 and start messing up, you got to go back and say, what was I doing to begin with that made me grow that much that I changed when I had more money that started costing me money?
Hmm. Yeah, exactly. Reflecting on these things. So unclear exit plan was number two. And I think that is of big interest to a lot of people as well as myself, because I know in the beginning that was definitely one of my things. I would say, all right, here's my plan for going in. The chart looks this way, looks pretty good. I'm going to go, okay, I'm going to take 3 contracts. I'm in. And then sometimes I would be saying, all right, now what? So is that just me and a few people, or do you think we don't think enough about our exits?
No, that is every beginning trader on the planet.
That's right. That's right.
This is the worst question I can get, and unfortunately, it's the most popular question, even with flow trading. Okay, great, we're in the trade. How do we exit? And there's
Yeah.
no answer to that for a million and one reasons. And one, if I'm a scalper and I'm up 20% in 6 minutes, I'm going to close that trade. If you're a swing trader and you close that trade with me and tomorrow it's up 120%, you're pissed. I'm not, because my goal was to scalp. And if I can get in and out of that trade 20, 30, 40% in an hour, whatever it is,
Hmm.
that's my trading style. I'm good with that. So if you're a swing trader and it goes up further the next day, you're going, well, why'd you get out yesterday? Well, because that's my trade style. That was my plan. So you can't tell someone where to exit because I don't know their risk tolerance. I don't know their account balance. I don't know their trade intentions. I don't know their trade style. I don't know a million and one things about them.
Yeah.
The problem is, and this is what I don't like about chat rooms, when people post a trade
Mhm.
and then other members just follow into the trade, they're going, great, where are we exiting? Which tells me you have no idea why you're in the trade, which means you shouldn't be in the trade. And
Well,
then the other thing is, hey, should I enter, or should I close the trade at 20%, or should I close it at 40%? Or should I use a trailing stop? And again, these are just arbitrary numbers. You can't trade like that.
right. Well,
So exits, you've got to find your trade style. Are you comfortable swinging overnight? Yes or no? If you're not, your trade style is scalping and day trading, and don't swing something overnight. And then you get the new traders that close it at the end of the day for 40% gains. It gaps up tomorrow, it would have been 80%, and they go, oh man, if I held, it would have been this. Yeah, but if you held and it went to 0, you would have been pissed. So you've got to know your trade style.
yeah, no doubt. That's leaving money on the table, which I've got a lot to say about that, but I don't want to jump over this exit plan. But you just mentioned people will do that. That definitely was the third of the fourth hugest amount of feedback I got. People want to hear us discuss. But the exit plan is interesting to me because like entering into a trade, like you just said, because someone else, put it out or something, and you're just going into the trade, that's not going to work. I mean, you can get lucky, things can happen in your benefit, of course, but exiting, you should know, like you just said, if you intend to scalp, then I know people who'll just scalp one candle. They'll go in and then they'll have kind of a stop loss at the top or bottom of a candle, and then they'll want to get out when it gets to a certain point, and they'll be out very quickly. And the exit plan was followed, and it was a successful short-term scalp. So it doesn't matter if it keeps running, like you just said. That took me a while to get that into my kind of psychology, because I would sometimes look back and think, oh, look how much money this would have made. But that doesn't happen anymore now that I've got as much of a focus on exiting as I do.
The only
You
time you should look back at a trade is after the market closes, go back to the chart. You can look at a chart after hours and see something completely different than when you're in the moment. So the only time you go back on a trade is the market is closed, you pull up the chart and you look at it and say, is there anything I missed having seen the whole chart that maybe I could have seen differently in the heat of the moment? And then you can say, oh man, I've always exited, my last 8 trades, I'm exiting here. And that's right when it bumps its head against VWAP, and then it pushes through and goes on to run. And if you see that constantly, well, the next time you take a trade, say, okay, I now want VWAP on my screen, and I'm going to see if it hits that level and rejects or pushes through. So you look back on your trades and see if there's something you're doing consistently with the losing trades that you can correct. If you did everything in your plan and then it keeps running afterwards, who cares? The whole coulda, shoulda, woulda thing annoys the crap out of me because it's not your trade. If you click the close button and you're out of that trade, what it does from that point just doesn't matter. It's not your trade anymore. So the only time to go back and look is after hours, and that's for journaling your trades and seeing if you can spot a pattern in all the losing trades, and see if you can spot a pattern in all the profitable trades, and then do more of that and less of the losing trades. Otherwise, if you're going back to look at trades that you're out of just to see how much you could have had, that's not going to help you in any way whatsoever.
Yeah, I fully agree. I think it actually hurts you as a trader. But you got, I mean, it takes a while to get there, though. It takes a minute to get there. There's no doubt that it's true.
Well, it does, because we're trading to make money, right? So if you made $100 and you see you could have made 600, of course you're going to go, oh man, I wish I had 600. Of course. But was it realistic that you would have stayed in that trade? Because if it's bumping its head on resistance and you close for $100, and then that trade goes south on you, where let's say you were up 100, and if you held on to it, you would have been down 400, and at the end of the day, you would have been up 600. You're going to ask yourself, would you have held through a $400 loss? So to say I could have been up 600, well, no, you couldn't have unless you were taking on risk or being irresponsible.
Yeah, the old idea of people who had huge amounts of gains, maybe the opposite of this, and they don't realize them, and then the gains, go fade away. People who were up like crazy amounts of percentages, like people who are up like 3,000% on an options contract, and then they lose that, Fugazi stuff. And I would never be in the position to be able to lose 3,000% of gains. I will say that right now, because
if
I would never let
that, you should not be trading.
Yeah, I would never let my gains get that high. I would have. It just would never happen.
Well, if they do, you should have a stop loss where you're not going to go anywhere close to losing that.
Yeah, right. Like, if the market's closing and you're 500% up on an option contract, don't just. I don't know. This is just my opinion, but I would secure those gains. Probably 400% before that would ever happen, but that's just my kind of trade style. Exiting is a problem out there, and leaving money on the table. One of the submitted trades we'll look at in just a minute is just that. This person, has this idea of that was the biggest issue. He took a loss, and then soon after it ran, and we'll look at that trade, and we'll look at the chart here in just a second. But the idea of leaving money on the table, I love what you're saying. You enter the trade, you leave the trade. It's no longer your trade. A trade was a moment in time. That time is in the past, and you don't look back unless it's from a mindset of learning. I love that.
Well, you should be leaving money on the table if you think about it. Because how do you not leave money on the table? By selling at the absolute top. How many of us have ever top ticked a sell? It's just not going to happen. And I actually put a tweet about that earlier today. You're not going to time the tops and bottoms.
Yep.
So if you're trying to time the top to get every single penny out of a trade, at some point you're going to hit that top and then retrace. Or, obviously it can go up the next day or whatever, but most of us are going to leave money on the table simply because we don't know where the top is. So if you're, like you said, if you're up 500% going into the close, do you protect that, or do you say, well, tomorrow it could be 600%? And if it is 600% tomorrow and you closed out the day before, you can't see the future. You don't know it's going to be 600 tomorrow instead of 500. So if you have a reason to close out any position, a valid reason, not just, oh, I hope this is the good time. If you have a valid reason to close out your position and you close it out and it runs the next day, you had a valid reason to close it out. So you're going to leave money on the table. The only way around that is if you top tick your sell, and none of us can figure out where the top of anything is. So good luck trying to do that. It's just not a long-term strategy trying to sell at the top. You want to sell going into the top, or what you think is the top, or where it's resistance, where it's currently the top, but it could run afterwards. We're going to leave money on the table. That's actually not a bad thing, because otherwise you're going to reach a profit level, and if it retraces, now you're giving all of that back because you thought you could get more money.
Regret. That's right. Yeah, I like if there's like an 8 candle, run, 8 green candles in a row. I love to get in on like the 3rd candle and like get out at like the 6th candle. That's just perfect to me. Just catching the middle of those up or down moves as a short-term, intraday scalper is the way. Like I've never been up more than probably, if you exclude like a really out of the money strangle that I'll do sometimes, where I buy something for $2 or whatever, and then sometimes that goes to $15. I'm not talking about stuff, but anything that had like a real cost to me. I've never been up more than like 110% because I always have secured that. I've never been up more than that. Have you ever been in a situation where you were up like thousands of percent for some reason? Have you ever been there, or just curious?
I don't know about 1,000. There was a point where I was doing a lot of 300, 400%, but that was a different market. So the
Yeah.
market we're in now, I'm taking 10, 15, 20, anywhere up to 40%. I'm locking that in because we're in markets that you're up 40% now, an hour and a half later, you're down 80%. So
it's awesome right now.
I'm taking quicker gains now, anywhere from on Friday, I think I had one that was 5%. I'm not trading for 5%, but that's all the chart was showing before it looked like everything was just, weak and reversing. So I was like, I'm just going to lock it in because I don't want to be in this trade anymore. So it was 5%. So now I'm not hitting, 100, 200, 300% gains anywhere close to that now. That's just not my trade style though. So if you look in the chat room, OMG and B are amazing at doing those 500, 600% gains, but that's how they trade. I have a completely different trade style, so that's just not the way that I look for entries and exits.
I hear the police. I hear the police outside. Was that you or is that me? It's okay.
That's me.
So leaving money on the table. I don't ever really, I just don't subscribe to that. I mean, I know it exists. I know it's a thing that we do, but I guess my mindset has become, I've burned that part of my psychology out to where I can basically, what you said is definitely how I approach closing a trade. It's closed at this green candle or red candle, and I just don't really worry about what it could have been, because like you just said, it could also have gone the opposite way. And I guess people sometimes look back and think about, well, look, I could have lost so much. It's kind of the same thing. But the idea of having a clear exit plan and just don't have regret after profiting. And I've definitely taken less than 5% profit on many scalps recently. It is a strange market, like you're saying. And, 2 or 3% sometimes it's fine. I just take it and move on. You can always make more plays the same day. So I'm with you on that. All right, lots of attention on the orb.
My favorite.
And you are did you bring, I know we need to slow down and acknowledge the opening range breakout is extremely powerful and a lot of people are using it. It is all over the trading rooms right now at Black Box. A lot of people are using it and profiting amazingly. And I think almost everyone has learned from your video is what I think. I know not everyone, but a lot of people have. So when did you start using that? Video itself is kind of old at this point. When did you get kind of into the orb as using it as on a regular basis?
I've probably been using it for 2 years now. And I put out the video. I don't know when I put the video out. Maybe 3 years. I don't know. I've been using Orb for a while, and then I decided to put a video out because I was just seeing trade after trade was respecting those levels really well.
Yeah.
And it's just way too easy of a system for people that are like, oh man, I can't figure out how to find entries. One, everything we do, for me at least, if it's not flow based, is technical analysis. You've got to have your support and resistance. So there's nothing magical about Orb. It's just support and resistance after the morning volatility is gone. So it's just the easiest technical analysis way to trade that I've ever found. and it was just making monster gains after monster gains, left and right, boom, boom, boom. And the ones that you lose money on, you don't lose a ton of money if you're using the strategy correctly, because if you're wrong, you know right away that you're wrong. You get out for -3%, -2%. You know, you're not taking 20% losses on this. So I was just putting it out on Twitter, you know, constantly, and I put the YouTube video out there, and then people would say, "I'm struggling. I don't know how to get in trades." So I'd show them the orb strategy, and it started picking up steam. And then I was talking to Charlie about it for a while, and he was like, "Yeah, it's cool. I like it." And he never really traded it a whole lot. And
Yep.
then for some reason, it caught his eye one day, and he's like, "Man, this thing is just really, it just works. These levels work." So eventually people were using it quite a bit, and he got it on the black box charting system. And from there, now it's all you hear about. The whole chat room is just orb this, orb that, orb everything. So I'm excited people are using it, because it's just way too easy of a system.
Yeah, it's blowing up. It's yeah, I've been writing about it in the column, and definitely people, that's one of the main things people contacted me about for this Saturday. People are having trouble entering orb plays too early. So I got a few charts coming up. Definitely get your idea, and we can talk about maybe how I think I have a more cautious entry than you do on the orb plays, but we can talk about that in a minute. Someone told us, thanks for that. They're saying your video is 2019. So that's a while ago. You know, you
Yeah,
are
so it's been out there for a little bit, but at
uh,
first it would be someone here, someone there, and then it got to the point where, like right now, almost every day I can send it to someone. So it's definitely gotten more attention. And since Blackbox put it on their charting system, so I'm
mhm.
not on Discord much during trading hours, but I'm in the chat room on the Blackbox platform, and all day long, that's all we're doing is posting retraces and bounces and orb this, orb that, orb everything.
Yeah, no doubt. People are asking too. Do you ever use? Well, here's a couple. Do you ever use 60 orb? Do you ever use the hour?
Now, I don't. That's so when
Yeah.
I started it, the main ones people use, I've seen 5, 10, 15, 30, and 60. When I started it, I think it was on the 60. And on a trending day, you just miss a lot of the moves. So I went down to the 5 and the 10, and I was getting shaken out a little bit. So I settled on the 15. And ever since I found the 15 to be for me consistently, I use the 15. That's just, I don't change it. I don't look at the other time frames. It's just for me, it's the 15-minute. And the number of times that level will come into play in a single day, it's astonishing. You know,
Yeah.
6 hours go by, you're at the close of the day, and it bounces perfectly off the upper or lower level. Now, of course, that's not every ticker, and it's not every day. It's like any other strategy. It has, you know, times where it's not going to work. But for me, the 15 eliminated the morning volatility, so I wasn't getting shaken out, and it got me in early enough on trending days where the 60 wouldn't. So the 15 just kind of worked the best of both worlds. It didn't cut off the beginning of the trend, and it didn't get in before the volatility of the morning. So to me, 15-minute just settled out to be the perfect time frame. So I haven't switched since I started using the 15.
Yeah, yeah. People are saying that their biggest thing is entering these orb plays too early, right? And having, you know, they're just entering them too early, and it's not going the way they wanted it to. So here's a very
So
simple
there's
kind of.
really two trades that you can enter using the orb.
Yeah.
And this week I had two losing trades. One of them, the entry was great. The market just turned, and it was one of those trades that just didn't work out. That happens. There's nothing I could have done about that. The second trade I lost on this week was entering. It wasn't an orb trade, but it could have been if I changed the time frame. But it was entering too early without confirmation. So when we
Yeah.
get to the point where I show the trade that I lost money on, you guys will see exactly how that comes into play. And I mean, it wasn't an orb entry, but it was basically, you can kind of see how it would have been if I had an orb 5-minute. And it was same thing. It was entering too early. I was trying to be aggressive, but I'll explain more about that when we get to that portion, whenever we get to it.
Yeah, let's get to that with a quickness. Real quick, this little graphic you guys see, like, so if this is the bottom orb, there's various ways you can enter. Like this first, you can see maybe this highlighted segment when it crosses this big bar down, when it crosses, people will enter there sometimes if there's tons of volume. And that's one approach you can take. And I don't do that. Often people will wait for retest. I know that's one thing Mike's video teaches us. And this idea here, when it retests, then it will enter, people will enter there. And I often will wait. You see this blue line drawn down here. I treat the bottom of this first when it's retesting up, especially if it's a low volume retest. That's what I love to see. Once it retests, and then once it gets back to that previous low, if it breaks that with volume, that's where I'm going in with a lot of confidence with a pretty big position. Relative to me, that's kind of my approach. But people have already started asking, do you always wait for retest, et cetera, et cetera? So that's just kind of the basic couple ways you can enter. I kind of wait for the retest and then for it to fall down and break that low. That blue line on the chart there is kind of what I do. And I miss a lot of entries sometimes because that doesn't happen. So just be aware there's various ways you can do it. And yeah, I'd love to see what you're talking about, Mike, as far as the trade. You can take it away. But that's what I think. And regardless, I always stop out if it goes the wrong way, just right above. Right above. If it goes the wrong way, I just kill it. I don't hang on. Do you hang on? Where's your stop going to be?
So it's a really simple system to use because it's support and resistance. So when your support or resistance breaks, you're out of the trade. So using the graphic on your screen right there, the aggressive entry is that first big red candle. The safer entry is where you have the retest, and your exit is going to be slightly above that red line. You know, you're waiting for a break below that red line. So if it breaks above that red line, the trade idea is invalidated. So once it breaks above that red line, I'm looking for where I'm going to exit. Now, if that red line, let's just random number, let's say that red line is $90, I'm not exiting when it's $90.10. I'm going to give it some room to see if it wicks above, does it close above, does the next candle open above? And that depends on a few factors. It's going to depend on the market conditions, the specific ticker I'm looking at, other tickers that might correlate. So there's more that goes into it necessarily than just, I like to simplify it and say, here's a line, it breaks one of those lines, I'm in. And that is what it is, but there's a little more to it as far as not getting shaken out. In other words, if everything I'm looking at is deeply red and there's one ticker that's breaking orb to the upside, I'm going to take a little more cautious approach. So I'm going to have a smaller position size on that because the whole market's tanking. And for whatever reason, there's one ticker that's going up. I don't know if that's going up for strength or if it's going up just for, you know, random time period for the morning or whatever it is. So if the market conditions, everything's cratering and I have something going to the upside, I'm going to be a little more cautious with that, or I'm just going to skip it altogether. So the stop loss, you've got to give it a little bit of room that if it breaks that level, you don't just cut it right away. You have to look at the market conditions as well.
Yeah, sure. And, you know, I've cut many of these just, you know, it's over the barrier. I'm just kind of cutting it and moving on. And sure enough, it will retest and kind of wobble and there it goes down or up. So yeah, I gotcha. So as far as your trade, can you take over? How do we, what's that?
Up at the top where it says sharing, there should be a screen and you should have the option to change presenter. The very right button, it says change presenter.
Yeah.
Click on that and it should have a pop-up on my screen that says take the screen.
All right, we got that. Yes, we're going to make 7-star. Mike, show us some fun things. All right.
All right, let me get the right screen on here. Now this might be, hopefully it's pretty clear for you guys to see, but we're gonna look at this section over here, the very end. And I know it's hard to see right now, but there's a reason why I have it set up like that. So, like I said, I took 2 losses this week. One of them was unpreventable. It was just the entry I still agreed with after I looked back on it at the end of the day, and the market conditions just changed. That's just part of trading. This trade was one that was 100% preventable, and this was me trying to be a little aggressive So what we have here, this was Monday for Intel, INTC. This is Monday. I was trading it early Tuesday. Normally, my first trade of the day is after the 15-minute orb levels are printed. Every now and then I do trade before that. I get a little aggressive if something lines up. It's kind of rare, but Tuesday was one of those days where I entered it. I think this was like 6 or 7 minutes, maybe a little later, but it was definitely before the orb level. So this is Monday here that we're looking at on the screen. Tuesday pre-market, you can see it got up here. So to make it easier, let's just put the level there so you guys can kind of see exactly what I was looking at. Now watch over here. All right, so pre-market, we pop up to here, then it gives a little back. In the opening, we get up to this point here, and then we start dropping. I'm going to advance the screen a little bit at a time here. So here we put in a low. The low point over here was about the resistance level over here. So if it breaks that low, I'm looking to take it short. Let's advance the screen a little more. You can see we get kind of down to that level again. There's no break of that level though. So right now this is acting as support. It's not an exact line, but if I draw the line over here, where it was resistance the prior day, you can see that level is holding as support now. Okay, so far so good. We don't want to go short below 48.44 because it's acting as support 1, 2, 3 times. I'm going to move the chart over a little bit more. And what do we see here? Well, we pop back up to this area about where that pre-market high was. So now we have a high on the opening candle. We've got another high over there, but it can't get above there. So we don't want to go long until we're above 48.92. Now you can see here, we make another high over there, but it's about the same level as this one prior. So now we have what isn't yet on the screen, it is now, but at the moment it's not a double top, but it could be, because to be a double top, we have to break below this level right here. Now you can see as I advance the screen, we broke below that level there. So this is an official double top here once it broke the 48.66 area. And now we're coming back down to the 48.44, which was support once, support twice, support 3 times. So now I'm going to advance the screen a little bit more. You can see we hit that level again and bounced upwards. So there's no trade for this right now. We want to go long above 48.92, short below 48.44. You can see we bounced off there. The next candle came in green. Let's move it a little bit further. You can see we touched it again and bounced above it. The wick here broke below that level of support, but then we have a green candle above it. So we're still not going short yet.
This is testing your patience at this point.
Now it is, because I'm kind of looking at it saying, okay, if we break below this level, I'm looking for puts. You can see this candle here. It's hard with the crosshairs on it, so I'm going to move the crosshairs over, but I'm looking at this candle right here. You can see the wick broke below that level and the candle closed below that level. And I believe there was some decent volume here, and the market in general, this is where I say you can't just look at a chart necessarily by itself. There's other things. This was a day where things were just at this point looking kind of weak at the things I was looking for. So since we broke below this level here, that's where I was going to take some puts. And I went short INTC right at this level here when we had a nice break there. You can see when I advance the screen, you'll see it easier, but the next candle opened below that level of 48.44. So there's no real confirmation just yet. We had a break below that level. The next candle opened there, but it closed above that level. So there's no real confirmation that we should be short below 48.44. I entered on this candle here because I was trying to get an aggressive early entry. If I advance the screen,
oh man,
you can see it did nothing but go straight up from there.
Yeah.
Right, so I'm entering on this candle here because you can see it, there's a big downward move here, and then the candles start getting a little smaller. So momentum is kind of slowing, but it's still not getting any kind of upward movement here. And when we got this big red candle, when we saw that whoosh right through that support, I said, yep, I'm in. So there was no confirmation yet, but I was going to be a little aggressive and take that early entry. And because there was no confirmation, it ended up not working out. So had I waited for confirmation, this trade would have, it would have kept me out of the trade that I was in. So I'm basically entering puts here at the very bottom of the day. So when I say we can't time tops and bottoms, well, I timed the bottom here. Unfortunately, I just went the wrong direction with it. So I'm entering puts on this big break here. There was no confirmation that support really broke. And then, you know, 1 or 2 candles, it was messing around that area, and then it just reversed and went straight up. Now, the good news, again, I'm pretty disciplined. When I'm wrong. So I didn't lose a whole lot of money on it. But had I waited for, you know, nice solid confirmation below this level, I wouldn't have been in the trade in the first place. Or I would have seen that this eventually held, and I could have got into calls and rode it back up to the other side. So my losing trade for that week was basically not waiting for confirmation. I was trying to be aggressive. So when I do that, I know there's extra risk. So I don't enter a trade without confirmation saying, oh, I hope this one works. I enter it saying, I know there's no confirmation. I know I'm being aggressive. So I know I'm taking on the extra risk. So that's one of those things where I knew I was breaking a rule, but I was also okay with the risk associated with doing that, because some of the other things I were looking at just made me feel like the market was looking kind of weak. So with this double top here, and with this big, you know, big red candle here, I was okay saying, okay, if I'm wrong, but I'm going to take the chance that this double top and this big red candle here, that's a good put entry. If I waited for confirmation, I wouldn't have had it to really stay in puts. So completely preventable. But again, I knew I was taking on the extra risk by not really waiting for confirmation. So I accept that risk. It's being irresponsible a little bit, because the setup that I'm looking for isn't confirmed. So it's me jumping the gun, me being aggressive. But again, doing that, I understand that I'm taking on extra risk when I do that. So if it doesn't work, I'm not mad at myself going, oh man, I shouldn't have been in that trade. Because before I even get in the trade, I'm telling myself, you don't have confirmation. So if you take the trade, there's a better likelihood that it won't work out. Are you okay with that likelihood that it won't work out? And if the answer is yes, then I take the trade.
Hey, someone asked on that entry down there in the red candle, what would have been the confirmation? Someone is asking what would have been the confirmation you were looking for? Like one candle.
So on this red candle here, let's blow it up a little bit, make it easier. So we broke below that level, we closed there, that's nice. The next candle though, we opened below it and closed above it. So we never really closed and stayed below that level of support.
Yeah.
And in fact, if you can see these wicks down here. So if you want to move the support down to the lowest wick, it's down here a little bit further. I mean, it's only 2 cents further, but still a little bit further. So if you use that level of support, remember the level of support I have on there is drawn loosely from the previous day. So if we use the actual low for the point of the day, you can see we closed above that level. The only time we really dipped below that level would have been here, and the next candle opened right above it. So if we're looking at that area as support, we just never had, you know, a close below that with continuation. So since I was using this line, where did I have, I forget where it was, but somewhere up here, you know, we closed below it on this candle, we closed below it on this one, but the next candle was straight up. Then we closed below it again, closed below it again, but the next candle was up. So it's never really giving this level a chance to be resistance. So what I would have liked to seen is a close here, then come up to this level, get rejected here, and then close down. That would have been confirmation for me. So it never really closed and stayed below that level. But again, trying to be aggressive and get that entry before it did that, I knew there was extra risk, and it ended up not working out because, well, not because, but one of the reasons, you know, there was no confirmation that it was going to stay in this area here below this level. So this level never proved to be resistance. Hopefully that makes sense.
Yeah, I hope that does make sense, you guys. So quickly, a few questions. What candle did you exit on? When did you kill?
Loosely drawn, I don't have it on here, but it's not going to be, you know, a perfect downtrend. But if you do in here or anywhere on this, and it's going to get confusing if you see that, which is why I don't draw them, but I visualize it. So you can kind of see this little trend right down here. Hopefully you guys can visualize that. The more you do technical analysis, the more you'll just look at charts and say, oh yeah, there's a clear level right here. So to me, this level right here is a clear kind of resistance. And this big green candle here, when it popped above that, is where I got out. So I'm not, you know, messing around. I'm not playing with it. There's a downtrend here. It broke above the downtrend with some strength. That's just it. And if it turns out it reverses and breaks down, I just get in when it breaks that level again. So
Yeah, yeah. So do you wait for that big candle to close outside of your one line resistance, or do you, as soon as it breaks, do you get out?
again, it depends on the other market conditions and what I see and what I feel. So basically, since this was a pretty clear downtrend, and this was I mean, for the day, this is a pretty big candle. We've got a few of these big green ones here right as it opens, but in generally, we've got these small moves here, small, 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 and then this big candle to the upside here. So as soon
Mhm.
as I saw that completing, it got all the way up here, then closed lower, and then the next candle opened up here. When I see any kind of a big move against me like that, I'm just going to close it out. So by the time I filled, it was probably on this candle here, one of these two. But again, if you visualize this little downtrend right here, what I don't like is that this candle here, this candle here, this candle here was all resistance at the exact same spot. If I draw it in there, you can see how these three candles right here stop right there. So
Oh yeah.
once this is a downtrend that's broken, this is resistance, 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 and then a big candle through that to the upside, I'm just going to close it out right there. And if I'm wrong, again, I'll get in the second time down here. The second time I'm going to wait for confirmation because the first time I was aggressive and it didn't work out. So on this big candle above resistance, 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 and also this downtrend was broken, I'm just going to cut it right there and be done with it.
Yeah, here's a good question. So after you take that loss, do you have to have like a little bit of a mental recovery period, or are you just okay with it and going on straight to your next
Nope,
next plan?
a loss is a loss. It's just part of trading. On to the next one. Just I'm immediately looking for another setup. Probably
Gotcha.
not on this chart. Now, if I happen sometimes, so I've got multiple monitors. So if I'm on this chart and I see something, I'll get into the same trade. That's kind of rare. So normally I'll just start cycling through the tickers that I like to see. If I'm stuck on this chart just because I either haven't moved this particular screen, whatever monitor I'm looking at that has this chart on, and I see it break down below this, then maybe I'd get into the same trade. But typically I'm looking for another setup. So on this candle or this one, whenever it closed, I see this big move against me. I close the trade and it's immediately out of my mind, and I'm just looking for the next setup already. A loss is a loss. We take them. You can't get hung up on them. So once I close a trade for loss, I just look for the next trade already.
And if you would have hung on through all those other candles going to the right of the screen as it just bled and bled out and you lost money and lost money, it's going to be harder to do that. So you're getting, especially this is a great relevant to the earlier point of everything from over positioning to taking the loss. You're not letting it go too deep red. You're getting out when it's invalidated, and that's that. And that's
No, because if the trade idea is invalid, which this one, my trade idea is a break below support. And again, this support level is loosely drawn depending on what you're looking at. So I can draw it wherever I want now because the chart is finished. But in the heat of the moment, I was using this level here, right about there, which was resistance here the prior day and about the support. So in the heat of the moment, I'm using that level there. When it breaks this downtrend and when there's a big move up, my idea is invalidated because it's not breaking below this level. So since my entry idea is invalidated, the trade doesn't make sense anymore. Get out of the trade. And if it just reversed here and stopped and started declining again, well, once it breaks below that level, then my trade idea, where this was prior support that's not holding, it's now valid again. So get back into the same trade. But once it breaks above that level, the trade idea, the reason I got into the trade, it's not holding true anymore. So just get out of the trade.
I think I can almost answer this question for you, but definitely a couple people are asking, do you also look at stuff like EMA VWAP crossovers or any bottom indicators? Is anything like that
So
part of
I'm a very simple trader. I have a side monitor that has some things on it that I can look at, but when I'm actually trading, it's literally just a line of support or a line of resistance. If you guys
Yeah. Yeah.
see, if we go over to Twitter and you look at, so this is how I trade. You know, the charts I post on Twitter, this is how I trade. There's one line of support. It was resistance here, and then it became support. That's an entry. And if you scroll through it, there's support. Support was broken. Resistance. There's an entry.
Hey,
Here's
that's
two
a great
lines of
example.
support and resistance. There's an entry. Here's one line of resistance. There's an entry. So I don't use indicators. Now, the side monitor that I have the orb pattern printed on, that side monitor never changes. It's the same tickers. On that one, I can flip through the 34 EMA, VWAP, etc. So when I'm actually trading, I don't really pay attention to those, but you'll see me in the chat room post something's bouncing off VWAP. So I can look at them. And in fact, I have indicators off on here. If I flip them on for quick reference, I've got 3, and it's going to be the 34, the 8, and VWAP. So when someone says, oh, something's approaching VWAP, one quick button, boom, oh, yeah, you're right, it's approaching VWAP, and I can get it off the screen again. So I don't trade with indicators necessarily, but I can pop them on real quick just for an instant visual reference of something. But the way I post on social media with one single line, that's really how I actually trade my own personal account. And it's not because I'm some, amazing trader that's going to be in the day trading hall of fame. It's literally that the more crap I have on the screen, I just can't focus. I can't pay attention to it all.
Yeah, Mike's, if you guys haven't seen it, Mike's I don't know if it's called one line trading, but basically that's the idea. He's got a video on his YouTube page and various places. It's basically one line trading, and it really is powerful. And I really appreciated that video, and it really has cleaned up a lot of just my charting. And I know you still make fun of my charts a lot in main chat because they're too busy, but
so I tease people when they have charts like that, but the bottom line is use what works.
Yeah,
some people, and if we talk about Pistol Pete, he's got 150 lines on his chart. He knows exactly what each line of those represents, and he knows exactly how to trade every single line on that chart. When I look at a chart like that, I just can't focus on any of them because there's just too much. My brain just explodes. But for him, that's how he trades, but he knows what every single line on that chart represents. I see people on Twitter that post a chart with like 16 lines on it, and you start looking at them and you go, why is this line here? It doesn't even make sense. There's no support or resistance. It's not a fib level. It's not this. And they just like to get busy charts because it makes them look smarter or something. So not everyone. I know there's tons of people out there that can have indicators and lines on their charts and they can trade them effectively. But I also know new traders, they have so much crap on their charts, they can't see anything they're doing with it because there's just too much on there. Yeah. Oh, well, yeah, it broke the 34, but the 36 is rejection, and then the VWAP is up here, but then this indicator and RSI, and it's like you have 9 indicators that tell you to enter a trade and 15 that say don't enter a trade, and you don't do anything because they're opposing. Eliminate the noise. Yeah, again, just my opinion. That's how I trade. Everyone has to find what works for them. So for those people that have 15 indicators, if that works for them, great. I'm just talking about the people that send me messages saying, I can't make money, I need help. When you look at and start digging into their trade style and stuff that they do, it's stuff like that where, oh, the RSI said it was oversold. Yeah, but you can have something that's oversold for like 6 weeks. What did the chart say? Oh, this looked like a good entry, but the RSI said this. So for me, and again, it works for me. It's not right or wrong. It's just right for me. When people struggle and can't find entries, I like to kind of simplify it and remove as much as I can without hurting them. Leave as much as you can on there that they can understand it. But if you have 15 indicators and 14 lines on your chart, I like to remove as much of that as I can where they can just look at it and say, oh yeah, that was a very clear entry right there. So just eliminate the noise, keep it simple. If you're an experienced trader and you're consistently making money, have a million lines on there, use every single indicator known to man, do what works for you. I'm talking basically for the people that struggle finding entries. For me, what works is just remove the indicators, remove, all and I have charts on them that have 6 or 7 lines. And when I start the morning, I might scroll back. So let's clean this chart out here. Let's go back to, let's just say this is yesterday's chart, and this is after hours, but let's just say this is pre-market here, and I'm looking at yesterday's chart and I'm looking at pre-market. I'm going to scroll back a little bit and see if the level that we're at now makes any sense. There's anything good here? Yes, no, boom. And then I'll just go, boop. I'll erase everything on the screen. And if this was pre-market, you can see here, this isn't pre-market, this is after hours. So again, I'm just using this as an example because it's in front of me. If this was pre-market here, I can see that we had support here at the end of the day. It's resistance in pre-market, so I might draw a line there. And that line would also correspond with resistance over here, roughly. So that's what I look at. And then once the day starts, let's just say this is the start of the day, I'm going to basically eliminate everything to the left of that and look at my 1 or 2 levels over here as the chart develops. I'm a very simple trader, mainly because my brain just can't handle 15 pieces of information at one time.
Sure. Yeah. Yeah. Someone is asking, they don't see volume on here at all. Do you not use volume when you're trading, or is?
So I do use volume. This isn't the chart that I trade off of. I
Yeah.
don't really use TradingView. I use TradingView just to post charts on social media and in the chat room because it's easier to screen grab. This isn't the chart that I actually trade off of.
Yeah. Gotcha. Gotcha.
The charts I trade off of, I do use volume. Volume is very important. I don't consider volume an indicator though. It's volume is just, I look at the candles and I look at volume.
Yeah, I look at yeah, that's same here, especially for very short term stuff. I'm almost looking at volume exclusively. It seems like, the way you clicked on those indicators. I wish the way TradingView does that. I sure wish Thinkorswim could do that. That's nice.
Yeah, there's
Um,
a few things I like about TradingView. It's not I like to kind of chart and execute as much as I can in the same platform, but I've got multiple monitors, and the monitor that I use for flow and the chat room is just easier for me to have TradingView up instead of the actual trading platform.
mhm.
So on that computer where I'm watching the flow and talking to people all day long, I just have TradingView pulled up there. So there are little things like that little button there that puts them on and then takes them off.
Yeah, that's nice.
It does make it easy. It's not the main system I use for trading, but there are things I do like about it.
Yeah, I got you. How many trades do you open and close daily? Someone is asking, generally speaking.
I there it just depends on the day. So when I was flow trading, it was probably anywhere from 1 to 5. As a scalper, it's probably right now I'm kind of slowed down a little bit because everything's like jittery. So I'm doing anywhere from probably 5 to 10. When I started scalping, I was probably doing, and this was years ago. I started off as a scalper and a day trader. I mean, there were days where I was doing 30, 40, 50 trades a day, just in and out within minutes,
Yeah.
finding, a few trades open at the same time. Like it was nuts. Now,
Yeah.
as I'm more experienced, and it's not about getting as many trades as I can in the day, it's about getting as many right trades as I can.
Yeah. Right.
I'm good with anywhere from 1 to 10 trades a day. That's all I need, and they're going to be the right trades, and they're not all going to be green, but the ones that are red, they don't go against me too much before I cut them. So I only need, typically it's probably anywhere from 5 to 10.
Yeah, yeah. I don't think I've ever done more than maybe 30 trades in one day, but I felt really I can't do that. I'm with you. I like around 7 or 8 usually. But what advice do you have? People are saying they have trouble with over trading. What advice do you have to people who know they overtrade, and what should they do when they just can't stop trading for a day? Any advice?
Well, first of all, you can take the screen back if there's something more fun to look at, because I realize we're just talking to a static screen. To overtrade, what you really need to do is just log your trades. And if you're making whatever you're making, let's say you made 5 solid trades for the day, and what I find is there's people that they have their 9 to 5 job. Every 2 weeks they make $1,000, and in one trade for 30 minutes they made $600, and they're like, oh dude, I should get another one in. Like, why? In 30 minutes you just made what normally takes you almost 2 weeks of your regular job to make.
That's right.
Stop trading. So to stop over trading, just log your trades, and you'll see there's a point where you're just forcing trades.
Hmm.
Now, there's no such thing as over trading if every trade you take is generating profits, right? If you take 65 trades a day and they're all profitable, you're not over trading. You're finding 65 valid setups. So to me, over trading is when you want $1,000 for the day and you're at 800. So you're going to force a trade to try and make $200. And maybe you do, maybe you don't. Now you go from 800 in profits when you want 1,000. You make a losing trade, you're down to 400. So now you're freaking out trying to go, oh, well, now I need 600. That to me is over trading, because you're not trading chart setups. You're trading because you need a dollar amount to feel good about yourself, or whatever the case is.
Yeah, right. Just yeah, I did find, I look back when I used one of those journaling programs, I still do, where it kind of shows you a calendar with a daily view, and it gives you the red or green total.
Yeah,
And really,
journaling will show you, man. You
yeah,
take 8 trades a day. When you take 8 trades, you end up losing money for the day. Every time you've taken 3 trades, you're profitable. At some point between 3 and 8 trades, either your eyes are tired, your brain is tired, you're not seeing the right setups, you're forcing for a certain profit level, whatever it is. So yeah, journaling will show you whether or not you're over trading and how do you stop that. For
Mm.
me, it just became a matter of at the end of every month, I'd go through my journal and I'd say, because I was getting to a point where I specifically wrote in the journal, I closed here based on emotion, not based on the chart. If I closed on the chart, I should have exited here. So at the end of the month, I went back and added up the difference between what I made and what I could have made if I traded the charts correctly instead of trading based on emotion. And the difference was staggering. I thought I had a pretty good month, but the amount I could have made if I traded the charts, it would have been an amazing month for me. And I was like, holy crap. Like I've never made that much money trading ever. And this was like the first, probably the second year I was trading, where I started really digging into everything when I was on a losing streak. And I said, wait a minute, let me figure this out. So I went back at the end of the month and said, oh, look, on this note right here, I said I closed the chart or closed the trade based on emotion. Oh, look, if I closed based on resistance, resistance was here on the chart.
Yeah,
And when
right.
I went back, I made a certain amount of money for the month that I was like, all right, that was a pretty good month trading. And then I looked at how much I made if I traded the charts instead of trading emotion, and I was pissed. I was like, oh my God, I would have had an amazing, that would have been like the best month I've ever made, like the most money from trading. And I got pissed and I did it again the next month. And I was like, oh my God, if I don't stop doing this, I just need to stop trading because I'm clearly a
Yeah.
mental block. And when I
Right.
got pissed enough, I just stopped doing the behaviors that were costing me money.
Right. Yeah. Sure. Yeah. That's the same for me when I actually saw, oh my God, this is 23 trades in one day, and like total profit was not much. I mean, it wasn't red, but like it just made me think I need to be more focused on quality because I don't want to sit in front of the screen, all day long. And somebody's asking about my more cautious. Somebody asked me my more cautious entry. I've got actual perfect. Let me bring this up. I can show you. This is the actual. This is my trading setup here, basically. And someone was asking about this. So here's the orb level on. This is from your script, actually, right, Mike? Isn't this your TOS
That
orb
looks
script?
like it.
Yeah, this is it. So you'll recognize this at all. And this is the 34 in blue, and then here's VWAP. So we talked about this idea. You talked about exiting on emotion and having no real reason. So we had this. This is basically how this works. Let me grab this. So I was watching this. Here it is. We all like this, and a lot of people enter here. In the break, and I was, waiting. Look at this huge red bar with this huge volume candle, and I think that's going to be a lot of people's entry. Would you generally agree? A lot of people would see, or what is the red flag here? To this second, what would you enter there at this point when it's already past this fib, or would you
No,
wait?
no, no. At that point, you've missed the
Right.
entry already.
That's right. That's
So
right.
if you don't enter that first mark that you have on there, that first red candle that dips through it, or the next candle that confirms it's opening below that support level,
That's right.
those two big red candles that came after it, you're at, well, for me, again, everyone has different trade styles. For me, those two big red candles mean I already missed the entry. So
Yeah.
where you have that mark on the screen right now, if I'm not in there or that first candle that opens below that, that third, fourth, and fifth candle that are the fourth and fifth are the bigger ones. So I've already missed the entry, so I'm not getting in there. I'm waiting for the retest at that point, or I'm just moving on to another screen because I missed the entry that I wanted.
That's
So like
right.
anything else, even if you're using orb, you can chase an entry. So if you're chasing, you got to be aware that, hey, there's a greater chance this is going to retrace and I have a bad entry. So for me, if I'm not in on those first two red candles there, that third, fourth, and fifth one to me is a chase already. So I'm not entering there.
Yeah, and we talked about this particular trade in the chat room because back when this was the entry right here, you'll see like it came back and retested, but it also barely got to that 34 and then it just fell off. So I was in basically a lot of people will go in right there, right? But remember my thing, and I did this time, but I often will wait till it comes back down and kind of breaks that previous low. So sometimes I would wait till there. But this particular one, I entered here and it started going great, and I exited at this red. Get all this off the screen, but I exited at this red area right here, and my mistake right here, like what there's huge volume right here going down. Those are big volume bars. You love to see that when you're in a put play. And here it's coming back up, and it's kind of a low volume, right? This low volume retest. But I had to exit right here. My brain just went crazy because you can probably guess, what did I accidentally see that I was trying not to see at that point?
You were looking at probably the dollar amount on your screen that showed a profit.
That's right. This was a Tesla zero point 0.5 delta put scalp. I try not to look at P&L when I'm in the heat of things. I'm basically looking at the volume and things, but about right here, I was curious and I looked at the P&L and my brain went crazy. My brain went crazy and I couldn't stay in anymore. And I basically exited right there with no data informing, like you were saying. And it's nowhere near the 34. And of course, it kept running and I saw this data come in, etc. Here's the coulda woulda down here, it actually crosses the 34. That would have been a great exit opportunity. And with Tesla at a 0.5 delta, so much more money. So that's an interesting aspect of what we're talking about that not only shows a couple things about how I approach this orb approach, but it sometimes just if you're up a certain amount, or if I'm up a certain amount, I struggle sometimes with just hanging in there, and the chart doesn't say exit at that point, in my
So
opinion.
here's a great example of how that hurts you, right? There's
Yeah,
no reason to exit this trade.
that's
And if
right.
you stayed in it until the point where you can look back and say, here's where, here's a valid reason to exit, you would have made more money. Now,
Right.
here's the thing though. So I say don't ever trade on percentage gains or losses or dollar gains or losses. And I stand by that 1,000,000%. However, there's some exceptions to that. And the exceptions would be, let's say you've traded 8, 9, 10 trades in a row that are all going against you. In that case, you might want that feel good trade to just say, hey, I found a trade to get into, I managed it, I exited, I made a profit. So you might have like 6 or 7 losing trades in a row and you're up 20% on a trade and you just say, you know what, I just want to lock in 20% and be done. Boom, that felt good to have a 20% gain. I'm okay with stuff like that. But in this case, you can see how much it hurts you by trading emotionally and not on the chart. Now, the caveat to this one is that it's Tesla.
It's
Tesla,
Tesla.
you can be up $1,400 in one candle, and the next candle you're down 1,400. So it's a lot harder to keep emotions in check for a lot of people, which is why I say new traders shouldn't be trading Tesla or Amazon. Now, I'm not saying that to you because I know you have experience with Tesla. Like Tesla's your baby, you're good with it. But a lot of new traders will look at that. They'll be up $600 in 3 candles, and they'll be like, "Oh, sweet." The next candle, they're only up 200. They're like, "Oh my God, I just lost $400." Click close to save 200, and then it goes on to run for this exact reason. Like it never gave you on the chart a reason to exit. You exited based on emotion.
That's right. And there's no doubt, like if people are new, Tesla everybody talks about it. Here's an example, avoid it. But like if you go in here, if you caught that whole candle right there, just that first candle with a 0.5 delta, it's going to be in a lot of people's minds a fortune. That's going to be hundreds and hundreds of dollars gain right there. Just that one thing. So it can be, I should say. There's no guarantee, of course, but it moves so quickly. And I've gotten into more of the mega cap things for scalping and doing okay, but it's definitely the psychology is different. And I see the questions. This is definitely a 1-minute chart. I don't do anything. I never scalp off anything but a 1-minute chart. Again, especially with Tesla. Well, what about Mike? Let's look at this submitted trade real quick.
Let's do it. That's what we're here for.
This. Let's go back to here. Here's a member. Okay, this is an orb put trade. This person, this is an orb entry. They entered at this first white line right here. I'll erase this in a minute. They entered there. They saw some. This is he saw the volume coming in, right? Here's the break of the orb here, the orb low, and he waited for this, right? So here's this, he entered here, and then it went against him. And his idea was he exited for a 30% loss at this arrow right here. And his reason was, this is VWAP and it went above VWAP, so he got out. So enter here, exit there, and took a 30% loss and basically got faked out on this retest, even though he thought that the volume down here, this volume bar, was pretty high, relative to these previous bars. So what do you see in this approach here? What feedback would you give this particular entry and exit? He feels like 30% loss was unacceptable. It was a pretty heavy position. What thoughts do you have about this snapshot you see of this chart?
This is where it gets a little hard looking at a snapshot because I don't know the feel of the day.
Right.
So if we're going to simplify it to just a chart, I would actually say that was a good entry. Like I said, I had 2 losses this week. One of them was a great entry that the chart just turned around and I took a loss on it. It's just, that's what happens sometimes when we're trading. And I think this is an example of that. So you've got a break below the orb. It comes back up to test that level. The wick broke above that level, but the candle closed below that level. And the very next candle opened and closed below that level. So I don't think you're wrong for entering a trade here. The only thing you could look at is market conditions and the feel of the day. So in other words, was there a lot of charts that looked like they were bottoming out where I could have said, you know what, I'm going to go a little bit lighter? Yeah. I don't know if you use the UVXY or some kind of risk factor associated with anything, but looking at that little snapshot by itself, I'd say that's actually not a bad entry. That's one of those trades where it broke the orb, it came back to test it and rejected. That's a good entry, and it's just one of those trades that afterwards it just immediately turned against you. Now, the only difference I would do here is, again, I'm a very disciplined trader, so that first, right about there, go to the right, one more candle. That candle right there, I'm probably exiting on that one or the next one because it broke above the level, it closed above the level, and the next candle opened and closed above the level. So I might, and again, so I'm really quick to get in and out of trades. So if a trade is going against me, I have no problem cutting it and just getting into the same trade, 3 candles later if I got faked out on the reverse. So I'm super quick on getting out. So you might want to give it a little more room. And if you give it, it looks like 1, 2, 3, 4 more candles after that, you might be thinking, okay, sweet, it looks like it's going to come back down. And again, you wouldn't be wrong for thinking that. But then the next candle is a big green candle to the upside, and the next candle is upside again. So that's one of those things you got to look at and just say, where am I comfortable giving this room to? If you're using, what'd you say, the orange was what, VWAP?
Yep, that's right.
Oh, I see it on the screen there. I just have the question box covering that. So what you can do is position size such that if this breaks, I know I have X amount of room between the orb low and the VWAP. And let's say that's a 50-cent move. So that's going to give me whatever the delta is, cut that in half. So let's say the delta is going to be, I don't know, $50. So if it makes it to VWAP, that's going to be $25. And I want no more than a $500 loss. That equals 20 contracts max. So you can kind of play around with position sizing that way to figure out, I'm willing to give it this much room before I see if I'm wrong. And if it gets there, it's going to cost this much in the contracts. But I kind of like that entry. That's, again, one of those trades that you had a valid reason to enter the trade and it just turned against you and didn't work. You've got a break of the orb, you didn't get in there, it tested it and rejected, you got in there, and it's just a trade that right after that, it just turned around on you.
Would you, like this volume candle here, would you wait for more convincing volume? Because I know that's high relative to this, but this initial break had, a much larger volume. What is there a story maybe with that volume candle or not?
There could be. This is also one of the ones where just using the screenshot, it's hard to say. So like, what time of day is that?
Right.
So if that's, the end of the day or the middle of the day, it might be different than.
It was 11:15.
11:15. So we're about 2 hours into the market. Yeah, so I want to see the rest of the morning's volume to see if that one big candle on the left there, is that the only candle that hit that level? Because this candle that we're circling right here or squared, that's higher than average volume on a
Yeah.
candle is that the candle that dropped or the green candle? Whatever
That.
it is, that's higher than average volume. So
Yeah.
that's one of the things we look for, right?
Yeah. That's,
So it's something to definitely take into consideration. If that volume is on the green candle, I would definitely want to see the next candle with just as much volume that comes in red,
that's right. That's right.
because that's bigger volume moving to the upside. Even though that's a really squishy candle and it doesn't have a lot of movement,
Yeah.
there's more volume that came in on a green candle. So I would definitely want to see more volume coming in on the red candle. But again, we've got the orb break, the test held as new resistance, and you entered a trade. So this is one of those cases where I'd say it wasn't really that bad of an entry. You just have to manage the position size based on how much room you're going to give it to the upside.
Yeah, gotcha. Yeah, I remember talking to this member too, like the idea, what do you think about exiting on a VWAP break if that's not necessarily why you got in? Like if you get in wanting to scalp purely on an orb level break, an opening range breakout break, and then it goes like where you said your exit would have been, right? Was much lower than where this exit was. Do you think if you get in for a orb break only reason, that should be your entry or that should be your exit criteria as well? Or should you then say, well, I'll give it till VWAP or I will give it till the 34 or whatever? Is that a tricky road to go down?
So again, remember, orb is just support and resistance. All right,
Yeah.
it's not a magical level, although it seems like it some days. It's literally just a support and resistance level after a set time frame. This set time frame, according to the market, is just an arbitrary number, right? Why do we use 15 minutes? There's no significance to 15 minutes into the opening bell. For me, I found that that's a point in time where the craziness and the volatility is taken out a little bit, but you're still going to get in on a trend. But in general, that 15 minutes is just an arbitrary number. It's not like there's an algo that says at 15 minutes of the day we buy or sell. Right. So if you have support and resistance based on the orb, but let's say you're on a daily chart and for the last 6 months there's been a solid resistance level 40 cents above that, yeah, I might give it that 40 cents to test that level, even though that's not the actual orb. So if you use the 34, the 8, the 21, whatever number you use, or VWAP or whatever, you can take that into consideration based on, I'm entering a trade here, I should exit here, but if I exit here, I know that just 12 cents higher up, there's a solid resistance level, then yeah, of course I'm gonna give it that extra 12 cents to see if that resistance level holds and rejects as well.
Right.
So if you use the 34 or VWAP or whatever you incorporate into your strategy, if there's a level there close enough to your orb entry that's maybe a little bit in the other direction, then again, I would position size it such that if it gets above the orb, so you're in puts, if it gets above the orb level, you want to close those puts, but another 38 cents above that is a solid resistance on the daily chart. I'm going to position size probably such that I can let it ride up that extra 30, 40 cents, whatever it happens to be. So yes, based on the orb strategy, I'm wrong. I need to get out of the trade, but there's a solid resistance level, 25, 45, whatever cents above. I'm going to let it ride to that. Now, if the solid resistance level is $4 above that, no.
Yeah, right.
Right. So you got to take your risk tolerance and position sizing into account and say, I'm wrong here, but 28 cents further is resistance. I'm going to give it that 28 cents to see.
Right. And if you did that, that would be a smaller position size probably to be able
to. Yeah.
to.
So I'm going to position size such that I'm wrong with the orb here, but I'm going to give it more room to ride. So I'm not going to go as heavy in something where, let's say on a daily chart, you've got the orb level that lines up with a fib level that lines up with the 34 EMA. Well, now I have 3 reasons to get into a trade here. So I'm going to go heavier on that position. Whereas I'm entering an orb trade here. If it goes wrong, I'm going to stay in it because just a little bit north of there, there's another reason why I can enter a trade. So I'm going to position size down on that one because I know I'm wrong on the trade, but I'm going to stay in it because there's another solid level. Now, what you can't do is I'm wrong at $40, so I'm going to see if it tests resistance at $41. No, it broke that. I'm going to see if it tests resistance at $42. Oh, it broke that, but VWAP is at $43. You know what I mean? So you can't keep pushing it up. You've got to have your break point. And as long as it's 20, 30 cents or so, I'm good with that. If it's $1.50 away, well, you might be looking at a different entry instead of the orb in that case.
Yeah, sure, sure. Here's a good question too, by the way. Some people have asked, when scalping, is it good to enter at the money? Like, what's your approach to that? I know that I always do. If I'm just purely going to scalp, I'm wanting to go in and out. I definitely go at the money for that around between a 0.45 and 0.6 delta. That's what I like to scalp at. But what about your approach? Is it good to enter at the money when you're scalping, Mike?
So that's kind of a common question. People say, hey, when you're scalping, how do you know what contract to choose? So first of all, on the expiration, it's always a weekly. The reason for that is if I know I'm going to be in a contract for 5 minutes or 10 minutes or whatever, I'm not paying the premium for an extra week of time that I know I'm not going to use. So it's always a weekly. It depends on the ticker what contract I'm going to go with. Something like Amazon or Tesla, I might go a little bit further out of the money just because those tickers can move $5 in one candle. But I'm not going $30 out of the money. I'm not going $100 out of the money, a little bit. If you're talking something like Snap or Twitter, my default selection is usually the first contract either in or out of the money. So let's say something's trading at $30. I'm going to either go with the 30.5s or the 31s. Sorry, the 29.5s or the 35s.
Yeah, I got
you. So if it's trading at whatever level, I'm going to go the first contract in the money or the first contract out of the money by default. And it kind of depends on the ticker and how quickly the ticker can move. And it also depends on the day. So if I'm trading same day expiration, and let's say a ticker's trading at $29 and you have the option of taking a $29 call or a $30 call, it's always going to be the 29. Because if that $30 call moves against you, it's going to zero very quickly. If the $29 call goes against you, you've got a little bit of wiggle room to still salvage the trade. So there's a lot that goes into consideration. But if you're starting out, I would say by default, the easiest selection is just take the first contract in the money and just use that by default to make sure that your entries and exits are good. And then once you start consistently making money like that, then you can kind of adjust the contracts and see, all right, this one's further out of the money, but this ticker moves enough that as long as I'm entering at a good spot, that one's going to become in the money or closer to it and make good cash. So you can play with it once you're consistent with your entries and exits. But generally, just again, to make it easy and to have like a default setting, the first contract in the money is probably just the easiest one to go with. The first contract out of the money, if the ticker can move a little bit, and if it moves wildly, like a Netflix, Roku, you can go maybe $5 or $10 out of the money, depending on what it looks like. Understanding that if you're $10 out of the money and it goes against you, those contracts are toast. So again, risk tolerance comes into play for every single one of these decisions.
Gotcha. Yeah. Two questions about, does OI factor into which strike? For me, no. What about you? Do you, and they're talking scalping also. Do you look at
No,
OI?
I don't really care. As long as I know the ticker is going to move. The only time I don't even look at OI. It's on my options chain, so I can see it there, but I don't really look at it. The tickers I'm trading though are tickers where the OI just doesn't matter. Like I'm not trading some ticker that has 600,000 as a daily average.
Right.
So the stuff that I'm trading, I don't need to know what the OI is because I know the contracts are going to move. I know there's enough liquidity there that I'm going to get in and out of the trades. There have been times where I've seen something that I like the chart, but it's not a ticker I'm familiar with. And I go, oh, this is a perfect setup here. If it breaks this level, cool. There's $4 to run until the next resistance. And then I look at the option chain and the spread might be 80 cents. And then I look at that and say, okay, they're probably not traded very much. And then you look at the OI and the volume, and up and down the options chain, the biggest OI is like 140 contracts or something. And then I'll just say it's a great position on the chart, but I'm just not going to trade it.
Yeah, right.
So OI doesn't really come into play for me because what I'm trading, I know those are going to have liquidity.
Okay. Yeah. I agree. Yeah. Members saying they feel like they're giving too much weight to OI. Real quick, Mike, here, we're at, by the way, you guys are awesome out there. We've got still well over 100 people here. There's a bunch of questions. We're at an hour and a half. Mike, are you okay to extend this a little bit, maybe for another 15 minutes or so?
I've got no life outside of trading. So if people want to talk trading, I mean, I'll sit here as long as anyone's interested in chatting.
Yeah, let's real quick look at this second submitted. This is a member who's in our chat room a lot, the main chat, and definitely wanted you to comment on this. Let's look at this trade. So this person, you see the one line, right? The downtrend, and this is Netflix. The idea was, so he was looking at calls, was looking at this one line trading that this guy taught him on the internet, and that was broken. And he goes in here at this candle and went out here at this candle. And it was a large position for this person. This person said it was an uncomfortable position. And
You
so
don't
in
have to
here,
say anything further. We know what happened.
in here, out here at a loss that was uncomfortable loss. And one of the biggest things, this person definitely just watched in horror, like we talked about, just watched in abject horror as this continued to move to the upside and just have a really huge, what woulda, coulda, and should have been. But beyond the obvious advice about don't worry about what could have been, what about this entry and this exit? He is definitely curious what your advice would be.
So there's a few things I'm looking at here. If you're entering on a break of that downtrend, that entry is a little bit late, especially for Netflix. I can't see the side of the screen, but if you put a line at the break of that downtrend and then put a line at the entry there, how much of a dollar difference is that?
Well, let's see. So the break was here, the entry was here. So roughly we're looking at this is roughly, of course, 427.50 up to 429-ish. $1.50.
So $1.50.
Yeah.
For Netflix, that's probably not the end of the world. For me,
Yeah.
though, if I'm going to trade that one, I'm going to trade it a little bit closer to the actual break of the line. Again, I'm very quick to get in and out of these trades. So for me, the break of the line, if that's the entry, I don't want to see those two big green candles afterwards.
Right. Right.
And here's why. Look at the second point of the downtrend where the big red and green candle touched the downtrend.
Yeah.
Draw a line from there straight across to the right.
Yep. There you
And
go.
look where your resistance is for those candles where he entered.
Right where he entered. Yep.
Right. So if you're entering the trade where he entered, you know there's potential resistance right above, probably $1 higher than where you are.
Yeah.
So there's 3 candle wicks that touch that level and reject. So for me, I would not be entering a call position there. My entry is closer to the very bottom of that trend line where it breaks. And then those 2 big green candles there are probably where I'm going, okay, I'm in the right direction. It's doing what I anticipated it to do. If you're entering where he entered, you got to look at that resistance level that's literally just right above the entry there.
So this is a late entry, right?
Late entry. And here's the other thing. The position size freaked him out to close the trade. If you look at the exit, it's just barely a hair below the entry. So there's absolutely no reason you would exit a trade there based on the entry. Now I can see, again, if you draw that line of resistance and you enter there, it hits that level of resistance and rejects, you're automatically going, oh crap, it just hit resistance and rejected. So that's one thing you can look at, but that's not when I look at this setup, to me, the problem there isn't the exit. The problem is the entry.
Yeah, okay.
Because you basically gave it no room to move once you got in. So if you're exiting 30, 40, 50 cents after the entry, you literally gave it no room to move around. And if it's Netflix, the spread on that alone, you might have entered the position. If it's a large position for what he was used to, the spread alone, the second you get into that position, is going to show a pretty decent sized loss, or it can.
That's right.
Right. Let's say the contracts were $3.80 by $4.10. Right. That 30-cent spread, if you have 50 contracts, that 30-cent spread is going to look like you're losing a lot of money the second you get into it. So to me, again, the problem on that one wasn't necessarily the exit. I mean, that was a problem because, again, you didn't give it any wiggle room whatsoever. The problem was, one, the entry, But in this case, the biggest problem was position sizing, because position sizing, you said it was a sizable trade for his account.
Yeah.
So I can almost guarantee, and I don't know if it's on the screen there. Again, my question box is covering the left side of your slide there. But you said the position size was very big compared to what he's used to. So my guess is he's looking at that entry, and then he's looking at his P&L and going, oh my God, I'm already down, $5,000. Holy crap, I got to close this trade. So
Yeah,
it was closed based on emotion. It was closed based on a bad spot on the chart. The entry was a bad spot, and it was all 100% due to oversizing that position.
Yeah, no doubt. Yeah, I think there's several things. Yeah, you just hit the three big things. There's several things in this, but like if you're at this downtrend, and if you can go in here and catch these candles, that's a great scalp. That's awesome. Get 2 or 3, decent moves up. If it's a big position, scalping positions tend to be.
But here's the thing: even if you're looking to day trade, right? Where you have that square, draw a line going across to the right of the screen at the bottom of that square. Right?
So,
yeah, right about there. So draw a line from that going, look, right? It never broke that level. So even if you're in the trade there and it made that big move up and then it came all the way back down, it never broke below your entry point.
Right. So you could let this ride a little bit.
Yeah, so you can let it. So if you intend to day trade and not scalp it, like it's a great scalp on just those 2 candles. But if you intended it as a day trade and not a 2 candle scalp, it never broke below your entry level. So you would have seen profits, and then you would have seen them go back to 0, but it never would have broke below your entry. So for me on that level of the chart, which again, that's why it's important to me to enter as quickly as that downtrend break. Because if you do enter as quickly as that downtrend break, you can see that lower portion there, an hour later or whatever it is, it never broke below your entry. So there's no reason to close that trade out.
Yeah, right. Yeah. So, I love it. I love this idea of you just have to get comfortable with, making correct decisions relative to your risk tolerance and all those factors, which is why it's not just what's going to work for you is going to work for me, and what's going to work for me is going to work for everyone. Too many things at play, and you can't just follow people because you don't know all these factors. So that's a great. I think that was a great submitted trade to kind of look at, because Netflix has been really wild lately, and people have been playing it to the downside with gusto in the chat room a lot. But anyway, yeah, that was the second submitted trade. I thought that would be an interesting thing to have you go through. So you would say,
keep in mind though, here's the thing: I'm not in this trade, and the market isn't open. So I'm going to look at this a little bit differently than someone that's actually in it with their money. Now, again, I've gotten to the point where the way I trade is very consistent. So the way I look at a chart is the same, or as close to the same as it can be when I'm in the trade versus after the hours, right? When I'm not in the trade, and I can look at it without any kind of, without the mentality of I'm in the trade, how do I manage it? Yeah. I'm kind of consistent on how I look at the charts in the same way. Not 100%, of course, because when you're in a trade, there's emotion involved, whether like you think you're a machine or not. So I can look at this chart and see 2 or 3 clear reasons why I don't like necessarily the entry and the exit. But if you're in the trade in the heat of the moment and you're oversized, you don't have the clarity to see that because you're focused on how much money you're losing already.
That's right. Right.
So again, like you started this seminar, position sizing is one of the biggest things, because I'm willing to bet if you had one single contract in that trade, you wouldn't have closed it out at that point.
That's right. That's right. Too heavy is going to make the psychology kick up into a whirlwind of just, I have to get out right now. So he was there. He had the P&L was plummeting. Who knows how many contracts, but whatever it was uncomfortable for him. When it got to that point, he couldn't take it. He closed it out. Immediately there's this big green candle, and then it just pushes up from that support, and he sat there, and he said he sat there and just watched it climb. Like, these are 1 minute candles where he's just
at some point you're just seeing the profit increase and you're not getting back into it, right? You're just looking at it going, oh, I could have gotten there. Oh, I could have gotten here. Oh, I still could have gotten. Oh, I could have chased it. So at some point you just destroy yourself mentally because you're looking at it. oh my God, I should be in this trade. Oh, if I was only still in it. So for me, you can't do that. But
Yeah.
keep in mind also, when we do seminars and stuff like this, I'm looking at someone else's trade from the perspective of the information that I know how I trade, and with the market not being open and with it not being my money on the line.
Right.
So, and that's why I like seminars like this, is because you can see someone else's point of view. I'm not saying this from the point of view that I'm the best trader on the planet. I don't make mistakes. I've made mistakes. In fact, I've made mistakes like this as well. So it's not really telling someone how to trade or what they should do. It's just from the way I trade and from my experience and from things I know that I've done wrong. This is how I look at this particular trade setup and what happened here. It doesn't mean I'm, the most amazing trader and I have all the answers. It's just, it's an outside perspective, which is what I like about these seminars. But don't sit here and think, guys, that I've never made these mistakes or I don't continue to make mistakes today. I don't think River would ever go on social media and say he's never made a mistake. So we're not trying to preach to anyone saying this is how you've got to do it. We've all done the exact same thing. So when you listen to people talk about a trade eval, always just keep in mind that it's a different perspective based on my 6 years of experience, my personal trading history, how I look at charts, how I trade. River's going to talk to you about his personal trade experience, how he trades, how he looks at charts. So there isn't always a right or wrong. It's just what's right or wrong for you. So when we do these seminars, hopefully we do them every Saturday. If we do them more and more, keep in mind that all we're doing is.
Oh, you there? You there, Mike? Did you hear that? I
I
wonder
think I got muted by mistake there.
Okay, there you go.
Yeah, so these seminars always, again, keep in mind that we're looking from an outside point of view based on the experiences that we've been through. It's not talking down to people. It's not, oh, you should have done this, you should have done that, because we're doing, our own trades and making different mistakes or possibly the same mistakes as well. So if you're ever listening to someone talk about what they would have done in your situation, always keep in mind they've made the same mistakes. They've made other mistakes that you either don't have a problem with. We all struggle with different things. So take these seminars. Again, hopefully we do them every Saturday, but take them with the idea that I have this problem, someone else had this problem, how do they fix it? Or someone's going through a problem they have, but I don't have that problem. So, I want to hear what they say so I can make sure I'm, in agreement with them. But it's not necessarily we're right, you're wrong. It's just everyone has a different viewpoint on how they're going to look at and analyze a trade. So these are all just about getting different people's perspectives and experiences.
Yeah, well said. There's no doubt. That's one of the great things we have going on, I think, at Black Box is just having access to other people throughout the day and just to be able to get input. And I know it's helped me, like it continues to help me immensely. All right, so let's do this. Let's try this experiment. This is an experiment. There's definitely a few other questions if nobody wants to. If you want to call in, you see the instructions. So there's a little hand on your upper right-hand corner, that little control box. If you want to talk to us and tell us about a trade real quick, raise your hand, or you can definitely type questions if you're less comfortable. It's totally fine, but it could be fun to, I'll unmute you and you can ask us a question and we can definitely chat about things. If a ton of people want to do it, we just won't be able to get to many because there's 107 people still hanging out, which thank you guys for hanging out on Saturday. Really appreciate that. But if you do have questions, if you want to talk to one of us, definitely just raise your hand and we'll get to you. And if it doesn't work, it doesn't work. But I see some questions coming in, and until that happens, let's just see what you guys have to say here. So, Mike, they want to know why you keep calling me hippie. That's not a question.
That is a good question. I know very little about you other than one screenshot of your face. And it's never meant to be any kind of mean or malice in any way. I'm a sarcastic guy, and I'll see something, a picture, and just kind of grasp one thing about it and use that to pick on people.
Oh, I got defenders out there. Yeah, the interview with Hell's Bells is coming up, and somebody submitted a question they wanted to know: is Hell's Bells or me a bigger hippie? and I do think I've got him beat.
You know what? That's a question for the Twitter polls. I can't answer that one.
Yeah, I know it. Okay, somebody wants to know, as far as orb, do you have to use other? Do you have to use VWAP with orb? Like, do you have to use other entries? You were talking about the entry can depend on how the market's doing, where support and resistance is in pre-market. A couple other people asked about, do you always use pre-market levels when you're orbing, or can you really just?
No. So orb has nothing to do with pre-market.
Right.
Orb is opening range breakout. So if the market hasn't opened yet, those pre-market levels do not matter. So before, when I said I was looking at that pre-market level, that was a chart setup that I was looking to trade the charts. So when the orb levels were printed, I was taking that pre-market level into account as resistance on the chart, not for the orb. Some people said that before. They say, oh, well, I want to mark the orb levels for pre-market. And it's just, you don't use that. You could, I mean, that's just a whole different thing. But it's designed that when the market opens, there's volatility in the market, and you want to let that shake out before you get into a trade. So what it's doing is starting from when the bell rings to whatever time frame you like to use, the high and the low of that period is the opening range. And you're looking for a break of one direction or the other. So you don't use pre-market at all. As far as using any other indicators with it, you don't. Again, so when I said, if it's invalidated, you're in puts because it broke the low, and it's invalidated when it goes above that level. If VWAP is 20 cents away, you can use that as where you're going to cut it. But as far as the strategy, orb is just orb. It's a high and a low period. It breaks a direction up, it breaks a direction down, that's it. You don't need the 34, you don't need VWAP. I think on the video I did, I explained using the 34, but I actually don't. As far as the strategy itself, I'm looking for a volume break up or a volume break down. I don't take anything else into consideration. Once you're in the trade, then you have to look at how you're going to manage the trade, right? So let's say it breaks the orb high and you're in a call position. You can't just say, well, I'm going to close it in 10 minutes. I'm going to close it at the end of the day. I'm going to close it, at $100 profit. You've got to find where you're going to close it. So in that case, then you can say, well, I'm in a call position. We're in an uptrending day. If it breaks the 34 to the downside, that's where I'm going to cut it. But you don't need the 34 to say the 34 combined with orb means I'm going to get in. If I don't see that, I'm not. You can do that, and that's just a stronger entry. But the orb entry is basically a break above the high or a break below the low. No other indicators needed. If you have those other indicators, it's just more confirmation.
Sure. Yeah. So the pre-market levels, you were just charting support and resistance, just TA from the chart.
Yeah. So before the market opened, I'm looking at that ticker saying, okay, this is about, if it gets above this level, that might be a trade I want to take a call on. That wasn't combined with the orb. That was just the chart setup I was looking at. And then when you have those levels printed for the orb, if you know there's a resistance level there, like I'm looking to go short because it's breaking resistance, and then you happen to have the orb levels and it breaks that as well. Again, that's just confirmation that this particular ticker is moving to the downside, or this particular ticker is moving to the upside. So I don't use pre-market levels for the orb strategy. That was just a ticker I was looking to trade based on the chart. And if the orb levels print and you have those levels on top of the orb, then it's just more confirmation of, yes, it's going to struggle to be to the upside, or yes, it's going to struggle to go down further because there's massive support or resistance based on the chart.
Okay. Here's an interesting orb question. Are there any orb strategies that involve trading between the orb lines, like the inside range? Or is it all just breakout? Is it all breakout up or left, up or down?
For me, I'm looking for a break above the high or below the low.
Yes.
However, Charlie has been looking at the orb for like the last month or 2 months. He's been really into it. And he's been saying, hey, if we're trading in the range and it's not breaking above or below, but it goes to the orb low and that looks like it's holding a support, I'm going to enter calls here for a ride off the bottom support. I haven't really used, occasionally I have, but generally I haven't really used the orb for that kind of an entry. But he's been looking at it that way and saying, okay, it's not like this is the orb low and it's not breaking below that level. So I'm going to get in calls here. And if it breaks below that level, I'm wrong, so I close it. But if it doesn't break below that level, I don't have to wait for it to break above the level because I'm using that lower level of support as my support entry. So you can absolutely do it that way. I just typically don't look at it like that as an entry.
Yeah,
Because
yeah,
if it's sitting on that lower level, I'm kind of looking for it to break below.
yeah, right,
That's a
right.
bias, so you don't really want to do that, but that's just kind of how I use those levels. So if it's sitting on that orb level, the orb low, and it's just not breaking below that, by all means, you can use that as a support entry, and you just cut it if it breaks below that level, 5 minutes later or whatever.
Yeah, that is interesting. I haven't really, I mean, that makes perfect sense just using it as another form of support or resistance. But that bias, that's true. When things bounce off the bottom or bounce off the top, I do expect them to go through. But now that I think about it, often it will go to the upper orb and it'll kind of bounce off a few times. And if you try to front run it, you get in trouble because it goes down. so the idea is maybe enter there, and then when it comes down, try to write it down on the inside range. That's interesting.
Yeah, Charlie's a smart guy.
Great.
When he talks about trading, it's definitely a good idea to listen in on his experience of trading.
Yeah.
So when you said before you love trading in a group of people that, they're like-minded, they're professionals, they do this for a living, that's what I love about the group too. It's a very lonely profession as a trader because I don't work for a company. I'm
Yeah.
in my living room by myself. So I love the fact that there's other full-time traders that this is like we just hang out with each other. That's the benefit of being in a group trading like this, is that if you have questions, or again, Charlie was looking at this in a way that I didn't look at it. Now he's opened my eyes to say, hey, you know what? Maybe that's just another way to use those levels. So when you said before about, being in a group and having other, eyes looking at stuff, that's the main reason I love being in this group, is because it's just, there's people that have way more experience than me that I can look up to and say, oh, wow, look, thank you for teaching me that today. I appreciate expanding my knowledge.
Yeah, Michael says that he has definitely used Charlie's strategy successfully, the orb as support or resistance. Lily wants to know, how long do you typically wait from market open to enter a trade? Do you ever scalp right at the open?
After 15 minutes is probably 98, 99% of my trades. So I'm literally waiting for those orb 15 levels to print.
Yeah.
Occasionally, and it's kind of rare, but occasionally I will trade before 15 minutes, but it has to be for a very specific reason, not just, oh, wow, we popped at the market, let's get into this ticker. So it has to be something I can kind of tell myself a story behind it, and not just say, well, there's big volume in pre-market, so I'm going to trade it. So I'm not good at trading the open. And I learned that because I was trading the open quite a bit. So there were days where I'd make great money trading the open, and then the next day I'd lose great money trading the open. So it got to the point where, and that's actually how I found the orb strategy to begin with. I was trading the open, making great money, and then losing it the next day, and making great money and losing the next day. And then I'm like, wait a minute, I'm not going anywhere. The days I make great money feels great, but then I give it right back. So I'm just not good at trading the opening bell. So what can I do to make sure that I have whatever the market's going to do, I'm not getting shaken out every other day? And that's how I found the orb strategy to begin with. So now I typically wait 15 minutes before I place any trade. And that's, like I said, 98 or 99% of my trades. Every now and then I will get into something before that. But when I do, I understand I'm taking on more risk by doing so, because my history says I'm generally not good at trading right at the opening bell.
Yeah, gotcha. So you try things, you observe things, you journal your progress, and you do what you're good at.
Yeah, you'll hear me say all the time, know the type of trader you are. You've got to know what you're good and what you're not good at. And I just got tired of making money one day and losing it the next. So eventually I said, you know what? I'm not good at trading the opening bell. So I'm just going to stop doing it. Like I said, it felt great to make money one day, but the next day I'd do the same thing and lose money. And I'm like, well, great. I had two, wild trades, and they balanced each other out. So I'm doing all this work and there's zero profit from it. Right. So I'm just going to stop trading the opening bell.
That's right.
So whether you like breakouts and you never make a profitable breakout trade, well, you're not a breakout trader. Find what works for you. You definitely have to know the type of trader that you are. And as a new trader, that's tough because you have no idea what the options are. Right? Like, what kind of trader am I? I don't know. What kind of trader could I be?
I want
right?
to
So
buy
you
and
gotta
sell.
watch all this stuff to figure it out.
Yeah, that's right. You know, you're very well known as a scalper, very talented scalper, and some people are saying they enjoy hearing you talking about TA, like this kind of TA focus of this seminar. But you know, some flow questions have come in. One, people wonder, do you ever scalp off flow?
I do. I love scalping flow. I mean, I love scalping anything, but flow, yeah, I'm not just a flow swing trader. I scalp it as well.
Yeah. And as far as exiting, there's definitely some questions. Some people have emailed me questions because they knew you're going to be on. They know that you're the flow lord, and the idea is people are curious about exiting flows that are not seemingly going your way. I think some people would like to have maybe just a quick little bit about so okay, you're in a flow trade, you're swinging it, it's not going the way you think it's going. Is it just support and resistance when you get out? Do you bail with the well? When do you leave a bad flow?
Why did I get into the trade?
Gotcha.
So if I got into the trade because it's the right type of flow that I'm looking for a swing trade, if it's red, I don't even look at it. I just, as long as the big money stays in, I just don't close the trade. I don't care if it's down 40%, 60%, I just don't care. As long as I got into the trade because it's the right flow to swing, the flow that I teach about, the top tier flow, I'm not talking spec flow. I'm not talking flow that looks good, but there's something I don't like. I'm talking about the best of the best top tier flow. As long as the whale is in it, I stay in it with them. I just don't care what it looks like or how bad of red it could be.
Yeah, so there it is. If the well is in, you're still in for
But
the top tier.
again, this goes back to how you open the seminar. Position sizing is key.
That's right.
I'm getting into these trades knowing if it goes down 60%, I'm going to stay in the trade. So if you're using a $10,000 account and you put $8,000 into this trade, can you withstand a 60% loss? And most people are going to say no. So I position size these such that if it does drop 50%, am I comfortable losing 50% and staying in the trade? And if the answer is no, then that's not a position size I'm going to do. Cut it back. At what point am I comfortable saying if this gets cut in half, I'm still okay being in the trade? So position sizing is key, but if I'm in a trade for the right reasons and it is red, as long as the whale stays in, I stay in with them. If it's spec flow, or if it's flow that I like but it's not great, I'm going to get into it based on the flow combined with the chart. So the exit will also be part of the chart.
What's the most you've ever had a personal play come back from the dead? What's the biggest percentage down you've had that has come back to profit?
I don't know exactly, and there's been a few of them, but we've definitely hit 60, 70%.
Yeah, yeah.
And those, again, those were based on flow trades. It was one of those trades where whoever opened it, the whale put, 5 million, 6 million into it, and then it dropped 60%, 70%, and we're going, oh, well, that's a write-off. That's one, we don't normally stay in trades that are down 60 or 70%. So I don't want you guys to think that's the norm.
Yeah.
But a few of them, it does happen. And we've seen, I think it was Uber at one point and pins. I know pins was one of them for sure. We got people into pins and like the very next day it dropped and it kept dropping. And that one was probably down 60% or 70%. And then it went on to make like 300% gains. Now, if you're listening to that saying, I'm in a trade that's down 70%, so I'm just, happy-go-lucky. No.
Yeah.
But we have seen some 60 and 70% down turn to green.
Yeah, so I've had people ask if a flow play is say down like 85, 90% and the well is still in, can we at that point just assume it was some kind of a hedge, and should we just bail at that point?
Yeah, so lately and this is again, it goes to market conditions. With the market tanking the way it has been lately, there have been a few trades where we saw a ton of call flow that after, like in the heat of the moment, we can't tell, we don't know. So we just have to go with the statistics. This looks like the flow we want to take, we're going to take it. No questions asked. After we've seen a few things happen, then we can look at it and say, okay, that looks like a hedge against a short position. When it first comes out, there's no way to know that. The number of times that happened, though, is in recent memory that I can think of. I know 2. I think there was 3. There might have been 4. So I know 2 for sure. The third one I'm pretty sure of. And I think there was a fourth one somewhere in there. So we're talking 4 trades out of the last 350 trades that we sent to the app.
Yeah, we've talked
So
about the
we can
features.
withstand the loss on those 4 trades if we got it wrong, because the other, 200 something trades are going to cover that and then some.
As long as our position size is appropriate.
Yes. So you open the seminar with the perfect start. Position
Yeah,
sizing and risk management is key to every bit of trading, whether it's flow or technical analysis.
that's right. And now that we're winding down, that's where we're coming back to. So I would like to take a minute and just ask you guys. I mean, so 83 people are here still. So what do you guys think? You want to do this each Saturday? Do we need to? Can you guys pressure Mike to be, a permanent co-host feature here? The pressure is real. Let me know. Send me messages. They say yes, Mike. They're saying send me messages. Let me know. Do you guys like this? How do you like this seminar? What did you like about it? What do you wish? Thanks for all the comments. I really appreciate this, guys. What would help you more? What would you like to, discuss in more detail? What do you wish this would have had today that we never got around to? Any feedback like that, email me, Twitter. Those are the best ways to reach me. Mike's information is up here too. Definitely, I appreciate you guys. There's a lot of these comments coming. I really appreciate that. So Mike, some people have had some rough weeks. Is what they had a rough week this past week, and they're saying they like to hear these things discussed. So
The one thing I'll put out there is the last 2 weeks have been very good for me. The weeks before that, there were some trades I took that just, I didn't like them. And I'm not saying, I totally, did something really stupid or messed up. Like the trades just weren't working out. So, and this is funny. So we were killing it with flow the entire year. So come November, I was like, I'm going to do a small account, put it on Twitter, and post every single day the balance, the ins, the outs, everything. So everyone's
Yep.
100% transparency. That's
Yep.
right when the flow stopped coming out with the
Turn it
thrust.
off.
It was incredible. Like the second I said I'm going to do this and hold everyone, like hold myself accountable in front of everyone, that's when
Yeah,
flow stopped.
but that account's doing great. You've got a great track record in that account. I know you're probably bored because it's moving so slow.
I haven't done anything with it in like a month and a half though. Like we're just not seeing the type of flow that goes in there. I also know traders that, they've had 5 years of experience, 10 years of experience, that they've had a rough month. So if you're struggling in this market, it might be you. I can't see everything that you're doing, but also keep in mind, it might not be you. The market right now is erratic. It's not going straight up. 2 years ago, you could buy a ticker and sell it at the end of the day and you made profit. Today, if you buy a ticker at the open, by the end of the day, it was profitable, then a losing, then profitable, then losing, then profitable, losing, and who knows where it ends up.
Yeah.
So it's just the market conditions we're in. If you're struggling right now, it's a very choppy market. So you've got to be quicker to react to your trades than what you would have had to be, 2 months or 3 months ago.
Yeah, that's true. I entirely agree with that, because back in the fall and late summer in the main chat, which is, there's some new people here too. Some people here saying they're on a trial, and there's some new people here. So like on the
Welcome,
main
trial members. We love having you here.
This is the place. I mean, this is Black Box Stocks is got it going on, and I'm not. That's just my personal opinion. It's got nothing to do with anything except what I joined as a member. It just helped me out in every way. But the main chat on the blackboxstocks.com website, when you go to the right third of your screen, you see the different chat rooms. The one labeled main chat is the one that Mike moderates every day from bell to bell. I don't know how you do it, by the way, but he's there the whole day, and that's his place. And there's tons of traders there, and he's exactly right. In the late summer and the fall, all these flows were coming in. It was amazing, and you buy one, and a couple weeks later you sell it, and it's great. But I would like to reiterate that there's a lot of comments. They're saying they're having a rough week and a rough, ever since the first of the year started, they're losing some money, and they think it's helpful to hear this. And I appreciate you guys came, and we definitely will keep doing this for you guys. It's a joy to do it. I'm glad you're here. But the idea is what he just said a minute ago before I rambled for 10 hours is the thing. You have to be a little quicker to leave something, in my opinion, in this current condition. The idea of just, buying and holding or swinging things is difficult. Do you know anybody, Mike, who's in the chat room who is still swinging the way they swung in, say, October? Or do you know of anybody who's still swinging, or has everybody switched to this short-term mindset? Because that's what it seems like to
You
me.
can absolutely still swing. The way it was 3 or 4 months ago, it's different now though. Like 3 or 4 months ago, we could find the right type of flow to get into a trade and hold it for 6 weeks. And
Yeah.
over the course of 6 weeks, it's going to go up and down, but at the end of 6 weeks, it's going to be up huge. Now, if you get into a trade based on, well, we're not even seeing the right type of flow right now. But if you get into a trade now and you try to hold it for 6 weeks, one day you're going to be up 80%, the next day you're going to be down 60%, the next day you're up 140, the next day you're down 200. So mentally, it might take you out of the trade that you might think I should just stay in it, but watching it go up and down every day just is mentally exhausting. Yeah. So we're not seeing the amount of flow, the type of flow that we're looking for anywhere near compared to what we were. And that's telling us that the big money is not confident exposing their capital to the markets. So that should tell us that those longer term swing type of trades, if these people that have millions of dollars of computer equipment, millions of dollars of research teams, if they can't find a position that they're comfortable exposing their clients' money to, that's telling us something. And that's telling us that if they can't, with all their equipment, all their money, all their research, they can't find a position that they're willing to open now with their clients' money at risk, then we shouldn't really be hard on ourselves if we can't find those trades that we're comfortable exposing money now for the next month or 2 months.
Yeah, no doubt, no doubt. All right, so basically it looks like, and if I've missed some of these questions, I do apologize to you guys, but we definitely are kind of running up on a time barrier at this point. So I'm sure I've definitely missed some of these questions, so I do apologize for that. But let me just say this, as we're gonna wrap this up. Again, thanks for all these comments, and definitely I'll be back here next Saturday. And what do you think, Mike? You wanna do it again?
I am a trading junkie, so I will sit and talk trading to anyone who wants to listen, and they will basically have to shut me up because you guys can tell I get a little excited about trading sometimes.
Well, there's already feedback coming in where they valued the idea of going through member trades that didn't work out. And so everybody out there, send me any trade you would like to have us go through, have Mike go through, and we'll definitely I'll get back to you. We'll discuss, what we need, but trade submissions will probably be the heart of this. So definitely contact me. My info is on the screen. I'm very active in the Black Box Stocks community. Send me trades that didn't go right. We're going to talk about, how we're going to learn from losing. This back in the beginning, that's how you learn to trade. It's how you learn to play an instrument or do a sport. It's all a very similar process. You do something, you fail at it, you reflect on the failure, you refine your process, and then you redeploy it. Then after you've done iterations of that 10, 20, 100 times, you start to get a high level of competence. And that's what this is about. So I just want to say thank you, Mike, for coming on. 2 hours on your Saturday. I know you're at a beautiful place that has amazing weather right now. You could be anywhere, and you were here. So I really appreciate you coming in and just, helping us learn from losses that we've made. And so we don't ignore losses and only focus on our gains.
I think you learn more from losses, right? If you get into a trade and it instantly goes green, and then for the next hour and a half, you're staring at nothing but bigger and bigger and bigger profits, and then you close it, like you don't really learn anything. All you learned was that you just got into a good trade and made profits. If you're looking at that trade and you lose money on it, then you can look at it and say, okay, like what didn't my eyes see when I first got into the trade, or what behavior trait contributed to me losing money? So you can, and you hear a lot of people say this, you learn more from your losses than you do from your profitable trades. Because when you make a profitable trade, do you ever really go back and evaluate it? I know I don't really focus on those a whole lot because I did what I wanted to do. It performed the way I wanted to perform. So I don't spend as much time looking at those thinking, could I have improved it? Whereas if something didn't do the way I wanted it to perform, then there's clearly something that I didn't see. So I definitely spend more time on the losing trades than the profitable ones. So I
Yeah.
think you lose or you learn more from those trades where you lose money just because there was clearly something you did wrong and something you can learn from that. And doing it in a group setting like this is just, again, it's just getting different experience levels and different sets of eyes on what you might have done, where I can place a trade. Let's say I lose money and I say, oh yeah, there was a resistance level here. I didn't map that out because that was 6 months ago and I wasn't on a 6-month time frame. And someone else can say, well, the reason you lost money also is because this is a major fib level or because VWAP was there. And if I'm not looking at those things, someone else can bring a perspective to what I didn't see because they trade differently. So that's what I like about talking to other traders about.
Yeah, a team. There's this people with different specialties. There's people with different, not just trading levels of trading talent. It's not just that, but just people who have different specialties. And I know when I first started, there were people using. You mentioned fib levels. I hadn't used them at all in the very beginning. I didn't even know what they were talking about. Someone was talking about fib levels, and I thought, I mean, I've kind of heard of that, but I don't know what it is. So I looked into it and I learned something. So that's what it is. It's a team. I don't want to say sport, but it's hard to trade in a vacuum. You hear a lot of discussion of don't trade alone at black box stocks, and like I've always been impressed with that because I mean it's not just a motto. In my opinion, it's not just a thing. It's the more input you have,
Well,
the
the other thing is, you know why we can tell you what not to do?
because you've done it.
Because we've done it. If I've lost money doing XYZ, I can tell you don't do XYZ, right? It doesn't work. And it's not just I tried something that didn't work, right? I tried something that didn't work. You tried something that didn't work. 75 other traders that we follow on Twitter tried something that didn't work. Generally, that practice doesn't work. So rather than, and sometimes you've got to do things on your own to learn them.
Mm-hmm.
I'm going to give you guys, before we wrap up, I'm going to give you guys a list of tips that I used when I was learning how to trade. And there's things on there that I can tell you all day long not to do, but until you do them, you might have to try it and see for yourself, oh, that didn't work. And then you try it again and say, oh, that didn't work again. Oh, that didn't work a third time. Now I see why people say don't do that, right? So part of trading in a group and part of us telling you, well, best practices say you don't want to do this. It's not because I have a rule that says don't do this. It's because multiple people have tried that and it generally just doesn't work.
Yeah.
So again, it's not preaching to people saying, no, don't ever do this. Don't do that. You guys are doing it all wrong. It's because we've done all those things and made the mistakes that every other trader we know that does this full time has done those things and made those mistakes. So now we can impart that knowledge and say to you guys, maybe you don't have to do it as many times as we did, right? You can listen to us say it doesn't work. You can hear, generally speaking about trading, other people say something doesn't work. And instead of doing it 10 times before you realize it doesn't work, you do it once or twice and say, oh yeah, now I see why that's a general trading practice. So again, getting together with people like this, it's the benefit is there of other people's experience.
Well, let me end it with this. I had a member, I've been chatting with members on Discord and Twitter, just late at night. You guys, let's talk about stuff. People, I'm everybody's bartender is kind of becoming the joke. But this one member, of course, this is no names mentioned, but this person, he or she said that they were very excited about you being a part of this and talking about some of your losing trades because they said to me that they look up to you and it just seems like you can't lose, like you're such a talented trader and you're so good at what you do. They said they just sometimes think that you've never taken a big loss. So what I did, I referred them to our Riverside Chats podcast episode with you, and I said you have to listen to Mike in his episode. I think it's in part 1 toward the middle, where he talks about the first few weeks of his full-time trading career.
That was a disaster.
Well, they listened to it and they said this makes him so human that he now really is a god. That's what they said.
So here's the thing. Sorry, I didn't mean to cut you off. Go ahead.
No, no problem. It was just an amazing comment. They said that makes you so human when they listened to what you said about losing that money in the beginning. They said it just makes you so human that in their mind you really are God now.
I appreciate that, although I will disagree with it.
That's what they think.
But here's something I'm going to say, and this I was watching, and this is completely off topic, but it'll come back to the topic. I was watching YouTube the other day, and there's someone, she's a famous, or I don't know how famous she is in opera, but she's an opera singer. And what she does on YouTube is she watches videos of musicians and she criticizes their vocal technique from the point of view of like a vocal coach. Right. And she's in opera, she's classically trained, and people say, oh, you should watch Metallica, you should watch Disturbed, you should watch Iron Maiden. And these are bands that she doesn't, like, she's not into them. Yeah. She's actually now into them based on watching all this. But she's a classically trained opera singer, and she's watching a Disturbed video and she's going, oh, I love how he does this with his voice. I love how he does that with his voice. And when he does this, what he's doing is opening his chest so he can breathe and get the right amount of air in. And his posture here is showing support for the way he can breathe. And the first time I started watching this, I almost teared up to the point where I was like, it's amazing to watch someone who's so in tune with what they do. Yeah. So here's someone who's classically trained in opera, and she has an appreciation for Iron Maiden, like Judas Priest, like Dio, and Disturbed, because she's so incredible about her craft of how to use the voice as an instrument. When she was talking about how they do it, I was like, to me, that's so impressive. Yeah. So there's something about people, and I'm not saying I'm not, an amazing trader. I'm good at what I do because I have a very specific, I trade flow and I trade technical analysis. That's it. I got good at those things. So I think I'm good at those. I'm not going to go out there and say I'm an amazing trader. I got good at two specific things. So I'm not saying this is me, but there's something to me that's so impressive about someone that's just so in tune with what they do. And watching her talk about these metal singers and how they're like the mechanics of the body and how they use the voice, I was like, oh my God, this woman is amazing. Yeah. So if you look at what I'm posting on social and you're in the chat room listening to the setups that I take and trade, it's not that I've never taken a loss. I take losses. I hopefully I don't have a ton of them, but I take losses. So it's not that I don't take losses. It's just that I've done it. And again, 6 years of trading isn't a long time. If you've been trading for 6 months, it seems like it, but 6 years is not a long time in this business. But I've done it enough to know what my trade style is and how to manage my trades according to my personality. So if you're in that chat room and you're watching me talk about, here's a chart I'm looking at, okay, it broke, and here's the chart after it broke, and here's my trade confirmation. It's not that I'm just some amazing trader. Like, I do have losses, but I've done it enough to the point where losses are just part of the game. And when people say, oh, you make trading look easy, you know why I can make it look a little bit easier than it probably is? Because I had an entire year where I couldn't make a single penny doing this. My first year of trading, I made great money. The second year, I gave it all back. Yeah. Right. So why does it look easier for me now? If I post a chart with levels and you look at that and say, oh my God, that's so easy to see, but I couldn't see it until you drew the levels. It's not because I'm some amazing chartist. It's because I've done it to the point where I can make it look easier than it is just because of the seat time. Right. Yeah. I'm no trading genius. I've been in the seat doing it for 6 years straight. So I don't know. I don't want people to look at the moderators in the group or someone they see on Twitter and say, oh, this person's just some amazing trader. And no, listen, we all take losses. If you're new to trading, guess what? I've blown up, well, not entirely blown up, but damn close to blown up an account when I started trading. Actually, there was probably a small account that I did blow up, but if you listen to Riverside Chat, I tell you about the first time I went full-time trading. I damn near blew up a $20,000 account in 3 weeks. Okay, we've all done it. We've all blown up accounts and lost money. So
And then when you listen to that, right after he blew that up, he decided, I'm going to go full time. It's time.
Yeah, that was a dumb decision, but I had to do it.
Hey, here's a very direct question. Someone wonders if you would mind sharing how many losses, just number of losses, did you take this week?
This week I had 2 losses.
2 losses. And gotcha. That is an
Like
acceptable.
I said, one of them, I believe in the entry and the chart just turned around. It was one of those things where, I can look back at the entry and say I did everything right and the chart just didn't work out. The other one was the one I showed you guys tonight where I tried to front run what I thought could happen and it didn't happen. So again, going back to trade management and discipline, I knew I was getting in early. So I knew there was associated risk with doing that early. And it turned out it just didn't work for me. So again, like right there, like I have my rules and I broke them in that case because I was willing to take on the extra risk. So am I some amazing trader? No, I had a rule and I said it's not meeting the conditions of the rule, but I'm going to do it anyway. And that's one of the trades that, it shouldn't have been a loss for me this week. So it was completely preventable, but I broke a rule. I was okay with the extra risk. And it turns out that it was good that I was okay with the risk because it ended up not working for me.
So those were your only 2 losses this week.
That was this week, but either the week before or 2 weeks ago, I had something like 6 losses. So again, it's not like if you think, oh my God, I wish I only had 2 losses this week. Yeah, this was a good week. The prior week or 2 weeks ago, whenever it was, I had 6. And I was looking back at those going, man, there was one particular day where I was just looking at charts wrong. There was out of those 6, I think, 3 or 4 of them were on one day. And then, at the end of the week, I'm profitable. So I'm able to take these losses and manage them and still make money. But yeah, if trading looks easy to the people that you look up to, it's not because trading is easy. It's because we've been doing the same thing for so long that we make it look easy. But you're going to have losses. Get comfortable with that. And hopefully, if we do this discussion every Saturday, it's gonna acclimate you to the fact that, hey, everyone takes losses. How can we look at that and improve ourselves? But everyone takes losses.
Yeah, based on some of these comments, I think we're going to just have to do it every Saturday, which is totally fine with me. And Dustin, yes, this is being recorded. It will definitely be available after the fact. So these are all recorded and posted. You can access them through our education calendar. And Teresa often posts things on Discord in our homework section on the Discord server. And also, I'll end it with this too. Also, when I had Kang on the podcast and also Maria most recently, they had similar stories like those. People look up to Kang and Maria and you, all the moderators, people look up to you guys as these amazing, traders and leaders. And sometimes people do think that you guys are just past the point in your career where you ever have to take a loss. And Kang and Maria, everyone told the exact same, not the exact same story, but they all talk about blowing up accounts and losing money and how much their trading education costs them. There's a segment with Maria that's just gold. It's just intense the way she just describes just what we're talking about. So as we have to wrap this up, let me just say everybody is going to take losses. The key to that, especially when you are new, is to have proper position sizes so you don't have too much pain when you have losses, so you can learn from those losses and you don't have to just quit trading. So definitely, I appreciate you guys coming. Mike, what final words do you have for the people, if any? I'm sure you're ready to go surfing or something, right? It's 3:00 where you are and you're ready to hit the town, I bet.
I am definitely going back out to the beach because it is still beautiful over here.
Oh, I love
so there's definitely something I want to close with you guys for sure.
Yeah.
I'm going to give you guys a list of tips that I used when I was learning. To find that, it's really easy. Go to tradetalkmedia.com. It's listed on the page you're looking at there under my name. I'm not spamming you with some random site. It's actually me and River. That's where we do our thing there outside of Blackbox. It doesn't cost you anything, so I promise I'm not stealing from Blackbox in any way. Go to tradetalkmedia.com. If you scroll down, we're actually doing a trial week now. So the first thing you see is where people can register for the trial week. If you go right below that, there's a section that says get your free copy of 22 tips for trading success. that 22 tips sheet is literally what I've learned over the first few years of my trading that basically stopped me from losing money and put me in a position where I wasn't losing money, but I wasn't making money. And then to go from that point to where I was consistently profitable. So the things on that list are the things I learned through my journey. I've gotten feedback on it. It's things that a lot of people look at and say, oh my God, I've heard this everywhere. Like, this is a perfect list. Thank you for putting it together. Again, I'm not trying to toot my own horn. It's not, some genius document, but it's the things that I learned over, my experience of trading. It's free. You just have to put in your email because I don't want to send it out to everyone individually. So put in your email and it'll automatically be sent to you. But the last thing I'm going to say for you guys is, listen, you can't be scared of losses. I know sometimes you take a loss and you're nervous to get into another trade. You can't be scared of losses. We all take them. We all have them. If you follow someone on social media that looks like they're just perfect and they've never had a loss, stop following them because they're BSing you. We all take losses. You can't be scared of them. You've got to position size such that if you take a loss, it doesn't hurt your account. You can still trade. And if you have any questions, River and I are both pretty accessible, even after hours and on weekends. And hopefully we get to see you guys back here next week with some more trades that we can evaluate.
That's really well said. And I have nothing else to add except thank you very much for you guys for coming. And Mike, have a great time. And yeah, like I said, send me questions, guys. Let me know if you have any questions. If you want to submit a trade, hit me up. And thank you very much. I appreciate that, guys. And we will be around, and have a great day. And don't trade alone.